Good morning, everyone. Good afternoon or good evening. My name is Tim Stout. This is the trading room session for February 8th. So we have, it's Thursday today, so interesting session. I'll go through some of the higher time frames before the open, and then we'll look at the price action, of course, when we're close to the open. We're trading around 50.11. And yesterday's high was 15.20, and so we're trying to take out today yesterday's high, and with that 5,000 on the S&P cash. But later on that, when we open the market, let's take a look at some of the things that are going on before we look at the open and yesterday. As usual, questions can be put into the question box, can be put into the Discord. If you tag my name in there, that is most helpful, so then I can just look at everything that has my name tagged and disregard anything else. So do me a favor and help me on that. Okay, so let's take a look at where we are. So we're trading around 50.11 at the moment. On the monthly chart, we are on our fourth bull bar. The month is young, right? So we're at the 8th of February, so still plenty of days to go. But we are very close to the all-time high at 33.25. Now, interestingly enough, this never traded at 50.33, right? Price in January 2020, what was it, 2022, was never really 5,000. It was 49, 4,800 something. But because you're back adjusting the charts when you are moving to the new contract, so we're now in the March 2024 contract. So in March, we'll move to the June contract. Your software should be self-adjusting the charts to make them continuous and to basically glue the prices together. Every new futures contract will be higher than the actual cash index price, because of the carrying cost of interest rates and the future price. And so if you look back at these charts, what software does, it's going to back adjust all of these charts. So although the all-time high is 50.33.25 on the chart, at that time price never was 50.33. It was 4,800 something. So now that we are coming to that, yes, we're going to set an all-time high at 50.33.50, but already, of course, prices are higher than they've ever been before. The only way to actually see that is the cash index. So I do have cash S&P here, and you can see that yesterday's high was 40. What was it? Let me see here. It was 49.99.89. So we didn't hit 5,000 yesterday. If we go today above yesterday's high by 2 ticks, then we're going to hit probably 5,000 cash on the S&P. And that's usually a newsworthy event. So tonight, well, if that would happen, then that would be something where news would be reporting on. This is very common, right? So the first time price moves to a magnet, and 5,000 clearly is a magnet, it typically doesn't reach it, right? Everybody wants it to be reached. Everybody thinks that that is a good place to take profits. And so with that, it just doesn't get reached on the first attempt yet. So yesterday we came to that 49.99.89. Today, if we go above yesterday's high, we're probably going to reach that 5,000. And then CNBC and Bloomberg and all of the TV channels can scream that S&P is at 5,000. Will the first close also be above 5,000? That is another thing, and that will probably not be the case, because the same thing happens on those times when you go above those levels. There's typically profit taking at those levels, so we might actually close below 5,000 today and close above 5,000 then later. Can we see that when we, for example, hit the 4,000 for the first time? No, I can't go so far back here. But that's going to be interesting. So interesting, yesterday the intraday high was 49.99.89. So monthly chart, we are February, so 1, 2, 3, fourth bull bar in a row. You can see that bulls bought exactly at the close of January. So as soon as January closed, monthly bulls bought at the market and we rocketed up since the 1st of February. Is that going to stay that way? I'm not sure. January had a big tail on top of the bar. We might have to come down to January's close. We might have to come down to December's high. I would be highly doubting that February is going to be a strong bull bar. Typically, February is a weak month and not a strong month. So it'd be very interesting to see what the shape of February will be. And I think it's either going to have a big tail. It might even become a bear bar. So where are we in terms of price? If you look at the November bar, well, you can see that we're already at a measured move, the size of November, at least almost. So that is probably the first target for the bulls, a little bit there. To get to there, that's going to be close to an all-time high, and there might be sellers there since we are in a trading range. You can see how much we went down, how much we went up. That is clearly trading range behavior. So somewhere above the all-time high and maybe slightly higher, there will be sellers selling it back to the previous all-time high. For now, monthly chart still bullish, so but stop is far away. Stop is now at 42.44, so there will be profit taking at that all-time high on the monthly chart. Weekly chart, so we had our 3 legs down correction since week 32, so that is, what was it? This was until October. I think it was September, October, no, August, September, October, there we go. August, September, October, we went down. We had that correction and measured move up. We are now close to a measured move up here. I don't think we're going to make it. We are in a third leg or a second leg. I think this is the start of the second leg, and this is the third leg, and this is the first leg. So we could go a little bit higher depending on which measurement you take, but it's getting very climactic. We basically shot up more than 800 points now in a straight line, except for this 1 week of correction. And so chances are that also here we're going to go sideways soon as well. We're probably just getting magneted up to the all-time high here. Let's see if I can get my pointer. There we go. So weekly chart by the close, but getting climactic, 3, 4, 5, 5th bar now in a row. Can you buy up here? Probably not, but probably you want to buy more if it comes back to here or on the 50% pullback. On the daily, we see more of a bull trend. So you have probably had a spike here and a channel here. So if you take the spike size all the way from here to here, why is this not moving? Yeah, there we go. If you take the spike from here and your measured move up is to 50-60, you can see that we went sideways here and then further up. So you could say this is the spike. Let me zoom out a little bit. This is the spike and this is the channel, and then the channel should land to around 50-50, 50-60. If you project this channel, that could also nicely be the high of the channel at around end of February, half of February, we will be touching that. So that is likely to go that way. 1 push up, 2 pushes up, third push up being created by the bulls, and the third push until now is a little bit more trading rangey. So we went up, we had an inside bar, we went up again. Let's see what today brings, and then maybe a third push. I think this might be a wedge before we go maybe more sideways, but still bullish on the daily chart. Breakout above bear bars, so every bear bar becomes a pullback with a measured move up. So you had a couple of bear bars here. Once we break out of that and we go further up, the whole pullback becomes a measured move target, and then we hit that measured move here as well. So these bear bars here, that becomes a target for resumption. And then as soon as we get there, you see the reaction by the bulls taking profit. And now as well, so that comes to roughly 50-50. 50-50, that's a nice number. So roughly 50-50 would be the next measured move for the bulls. And you can see that they broke out. We hesitated for a little bit and then we resumed the trend up. So 50-40, 50-50, just above the all-time high on the futures would be where the target is for the bulls on the daily chart. We had an inside bar here, so inside bar, another inside bar, so we had II, and then yesterday escaped the II and reversed up. This could be a magnet for price to come down to, so we could actually come down into the 49.80 region, but it's also a bull bar with targets higher. So if I zoom in a little bit on that, so we are almost at those targets yesterday. So can today come down into that 49.80 area, or are we going to go a little bit further up and test the highs? We'll see at the open, but until now it stayed as an inside bar. So the whole Globex range is a small inside bar within yesterday's range. On the 60-minute chart, so this is the continuous chart. You can see how we had a spike here and we're building a channel. This channel is going to be a trading range. So a channel is the early part of a developing trading range. You can draw a channel like this, but you can see the price is sort of a little bit too much in the middle. So maybe we have to refine the channel a little bit and say that it is more this to here and this to here, but then also we're a little bit too much in the middle. So just have to see what price is doing. There's not a real easy channel to find. We have been going back in sort of a wedge shape to the moving average. We now just set a outside up bar, and this hour is determining if we're going to get continuation. We're just 14 minutes into this hour, 15 minutes into this hour. So the bulls are going to want to see continuation on this breakout bar to 50.18 and 50.25. Around the open, so we're at 50.11, so we're a little bit below yesterday's close, around yesterday's close, and we might just go to yesterday's high at the open first. Then yesterday, so yesterday I think it was a little bit scary because of the big gap up, right? So you've been lulled into a trading range for many days. We had a big bull trend, but then we had trading range here. We had a trading range the day before, and then you open with a big gap up. And so traders are hesitant to buy for continuation of the trend. And also because you are at targets, right? So if you take the trading range from the day before and you project that whole day as a measured move up, we're not so far away from that measured move at the open. So you're only are like, what is it, 3 points away from the measured move, and your stop is probably all the way down here. So there's not really much to buy here. Big gap up, you see 3 bars on the open that are not in the direction of the gap. So big bull gap, but where are the bulls buying? They're waiting and bears are scaling in. So is this the beginning of a bear trend from the open? Are we going to just dive down back into yesterday's range? Or is it a pause and a pullback from a big gap up, and are we going to get continuation? Right now, at the beginning of the day, I would say bears are in control. But what you don't see is that on the Globex chart, where do I have it? Just a 5 minutes. Yeah, I have it here. What you didn't see is that on the Globex chart, we were in a very steep bull trend, right? This was prior to the open. Everything that has marking here is before the open. So this was a very steep bull trend. When the first 3 bars pulled back, we only went below this low. We didn't go below this low or below this low. And so we were still very bullish, although we came back 3 bars. So if you look at the Globex chart just right before the open, forget about all of this, you knew that the momentum was very bullish. And so I still saw these 3 bear bars, but I was looking to buy. I was looking to buy in the direction of at least that measured move and probably even a little bit higher. So you could have sold. So if you sold the first bar, that would be very aggressive. But if you sold the third bar, you could even sell higher above it, get out break even, or just get out when you see a second bull bar reversing up from 3 bear bars. So you have 3 bear bars, you have a very strong bull bar. The bears still are in control. So when it comes back down, what do you think a lot of bears are going to do that sold bar 3? They're going to buy back their shorts, right? So they might have sold bar 3, they might have sold more higher, up like above the 3 bear bar, and then get out either break even somewhere in the middle here when 4 closes, or at the close of 3, which was also, of course, the close of a 15-minute bear bar. Then you have a little bit of 2 legs down again. So you have 1 leg, a new low of the day, a reversal up, and a second leg on 7. But then the bulls take over, and every bear, if you go above this one, then that's not a big deal. But if you go above the second lower high, that is when the market is clearly always in long. And you can see that bar 8 was bought market with a limit order. You couldn't even buy it, right? So it was bought with market orders, and it just shot up like a rocket, forcing all bears to exit and become bulls as well. So very strong reversal there on 9. I entered where it went above the second bear bar and then rode that whole thing up to the measured move. By now, bar 9 is, of course, a 15-minute bull bar as well. So the bull bar to the 9 close was to 1675. And we reached that later in the day. So that was basically one-time risk on a big 15-minute bull bar. That 15-minute bull bar is here. Breakout above the first bear bar. And so at a minimum, when it breaks out above this bear bar, at a minimum, you want to see a measured move. So that is from the 6 low to the 1 high. That got reached here on 1050. But also you would want to see this bar 9 at a minimum get a measured move as well. So that took a little bit more. So that was the 12 high. Price shoots through targets a little bit further and then actually realizes that it's too far and it comes back to the original target. So it's like an elastic where price just goes a little bit too far and then has to pull back, has to come back into those original targets that were right here. And that's what happened, I think, on 13.14. Buying 15 was a good one. You got one time your risk here on 15.13. That was probably all you could get because the probability was so high of making money buying 15 that you didn't get 2 times risk reward, but 1 time risk reward. And then we basically entered a very long sideways phase where the bulls were probably making easier money than the bears. So buying below any bull bar here, buying below 20, buying below 24, buying the 26 close, buying below 29. So buying below any bull bar, expecting some bullish continuation was, in my view, the way to go. You could have sold here 17. Maybe you had to exit for 1 time risk reward. You could have sold maybe the second entry short here 35. I think it's aggressive with so much bullishness in the market, but you got again 1 time risk reward. And then market turned back always in long when it shot up during 43, and when it came down and didn't take out any new lows, the market was always in long. So very good buy here 44. After market turning always along. You can see it was the best trade of the day because it gave you 2 times risk reward. So better than buying 8 or 9 because that only got 1 time risk reward. The best 2R trade was buying 44. And again, then buying below 48, buying below bull bars here and here and here. all the way to a new high of day. And that's, of course, where everybody took profit, because at this high, bulls took profit. At a new high, bulls took profit. So at this high, a lot of bulls would take profit as well. Since we were taking profit at every new high, it made sense to do the same. A little bit of a correction down. So we took out this lower high and we took out this lower high. And so this was probably a good short. This was a good short as well. So shorting towards the end of the day, but risky because the close of the day can do unpredictable, wild things. So if I'm not in a trade, and I'm usually not at the end of the day, then I don't want to enter into the last 10 bars or so. Right? For me, that's 10 p.m. as well, so I typically am not even around at this time. But you can enter. It's normal price action, but price action towards the end of the day also cares about the close of the day. So it might revert back to the open. It might just take a spurt towards the high of the day, and forgetting all of the things that were going on right at a couple of bars before. So just a tricky one. If you're at bar 75 and you want to enter, there's only 6 bars left in the day. So probably tricky to take that short, although it was a valid short to take. So that is that. I have a couple of minutes left. So cash S&P 5000 is probably 50-20 and a half, 50-20-25. So the bulls will want to get to here, to this level, because that represents 5,000 cash. Why is it doing this? I don't know. Quit. Okay. So got a normal mouse now. Let's try it one more time. There we go. The Globex. So Globex chart, 5-minute chart. You can see that we shot up about an hour ago. So we probably had some news here. We got to one-time risk reward. We probably want to get to 15.1375 around the open. We're always in long, right? We took out all of this. This was a bear leg. This was a bear leg. We took out at least 2 bear legs. So around the open, we are always in long. When would we not be always in long? Well, if we take out this higher low, and if we take out that higher low, I would think that we're no longer always in long. But right now, at the open, even though we're opening a little bit down from yesterday's close, I think we're always in long, considering the price action right before the open. So gap down, but always in long. So probably, if we're going to open around here, probably going to go above yesterday's 75 very quickly, and yesterday's 79 as well. And then to get to 50-20-25, 50-20-50. All right, so I will just pour myself one more coffee before the open. Questions box is open, and also the Discord is open. If you want to ask any questions or give comments, then use those. If you use the Discord, please tag my name so that I don't have to scroll through anything. I'm managing my own orders and the trading room and the questions box, and I have a left eye on the encyclopedia, so I'm doing a lot of things at the same time. Please help me then tagging my name in the Discord. All right, I will be back right before the open. All right, all ready to go. All systems go. So our Globex chart is looking good. We just took out 2 lower highs. I like that. Probably going to go a little higher at the open. And there is the open, just close to yesterday's close. Yesterday closed in a trading range. The trading range was about 8 points, 10 points tall. So tight trading range in that regard for stop orders. But since the bars yesterday towards the second half of the day were also small, there were some stop orders here. But this was mostly a limit order market. So will the open today be larger than this 10 points, 12 points range, or will we have a tight trading range open? We'll have to see. In general, yesterday after bar 12, all the bars were not that big, except then maybe the 43 breakout to the upside, profit taken and coming back to the downside, 43. But especially here after bar 48 yesterday was a very small range. If you want a breakout, you typically need it on the open. So a breakout can come from a gap, like a breakout here above the range of Tuesday came from the open on Wednesday. That was already a gap. Another breakout is typically on the first couple of bars of the day if you're staying within the range of yesterday, and then a breakout to above yesterday's high, that would force a breakout. So breakouts are typically common on the open first hour or no, with the gap. So we are always in long on the pre-market. We're always in short, you would say, on the RTH. And so the result is often a trading range for the first couple of bars where the market determines what is the situation. So yesterday on the pre-market, we were clearly always in long with a very big bull rally right before the open. And then the open is always in short with 3 bear bars. So the result is a couple of bars sideways where bears scale in and make money and bulls scale in and make money, both believing that the market is going their way. And then bar 9 makes an end to all of the doubt, and market is clearly always in long. If I'm in doubt whether to follow RTH or ETH, I follow ETH because it's more recent price action. So if we are rallying close before the open, I think we're rallying into the open as well. So I tend to give, in this case, the bulls the favor of the doubt because we just went up, pause, another up. I'm expecting a little bit more up from the Globex, but it doesn't mean that it's all too bullish because of all of this, well, still bearishness from yesterday's final hour and then today's open. So I do think more long than short, but definitely trading range open. You can also see that on the first bar, right? We went a little bit up, touched yesterday's close, we went down, and we're now up again. So bar 1 behaves like a big trading range, well, big trading range, like a small trading range, but there's ups and downs in there. So on the 10-second chart, there's a lot of trading range price action. Usually the bar 1 sets the tone for the day. If bar 1 is going to be a big bull bar or a big bear bar, chances are that the day is going to have a lot of trend price action. But if the first bar of the day already shows a lot of trading range price action, chances are that if there is more reason to believe that we are in the trading range, that we're probably in the trading range. Well, look at yesterday, a very, basically we had 60 bars of trading range price action. Bar 1 today is within that range and it's behaving like a trading range bar. So today we're probably going to have a lot of trading range price action. Also, when Tim starts presenting, you typically get a tight trading range until I leave. So that's an extra indicator that we might be in a tight trading range. So will bar 1 close as a bear bar on its low? It will probably not. It will probably close around the middle of the bar. And it closes exactly in the middle of the bar. 50-12-25, 1 tick above the middle. It is a bear bar, so bears own it. So if you would choose anything here, you would sell the bar. Bears are hoping that we can get back into this trading range that we had at the open. So there was a range here. We went to a range to the upside of that range, and then we went to a range to the upside of that range. The bears are hoping that we can return back into this range. Bulls see that the 5,000 number is so close that we might have to get there. Target on the Globex 50-minute bar is 50.16. We're probably going to get there. Globex's high is at 50.1625, I believe. Yep. So extra reason that I think we're going to get to 50.16. If bar 1 is a trading range, is bar 2 a breakout of that trading range? We just flagged 50.16. I do think we can go a little higher. 50.1925 would be a successful breakout. A close within the range would be a failed breakout of bar 1. And if you sold the bar 1 close as a bear, 12.25, and you sell more at its high, what do you need? Well, you need 13.50 to get out break even. Almost got that. If they get it, the market is friendlier for the bears than what it looks like. And they got it. Got it. So bears sold the close of 1, they sell more above 1, and they got out. So bears making money, but only by selling above a bear bar and not selling a bear bar. Bulls making money buying a bear bar, trading range price action. It's probably going to test the high of 1 again, right? We tried to break out above 1 once. We're going to try to break out above bar 1 again. And now it's the bulls that are buying below the bull bar, trying to get our break even on that one. Not sure if they already did. 12.75 would be it. And they're getting the breakout instead. So bears making money here. Can they get a measured move down from bar 2? So that will be 5,008. Well, the bulls will probably want to buy, right? So they buy the 1 low, they buy the 2 low, 12.75. So some will buy 5.75, 7.75 to get 12.75. So bears failing, bulls failing. Result is still a trading range. Is this now a wedge? So leg 1, leg 2, leg 3, and a wedge? It might be. We still have to see what the bulls can bring. I think bulls are happy to scale into this area as long as we don't go below yesterday's 44. They're happy to scale in and get 12.75 most likely. That is the break even still from the bar 2. So the bar 2 low to the bar 2 close, the middle of that is 12.75. And still likely that the bulls will get that. I was a little distracted with my orders here. So some bulls will know 12.75 is what other bulls need for break even. And so they will buy 3 points lower, 5 points lower for 12.75, knowing that we're probably not going to go below 44, which is a major higher low. And so they're willing to buy, for example, 7.75 for 12.75 as a scalp. Already they're probably going to buy 9.75 for 12.75 for a 3-point scalp, which is a scalp in a smaller range. And so bulls will scale in at those levels, trying for that break-even point, 12.75. Bears will want the opposite. Bears will want to break yesterday's 44 low and then get lower and then come into yesterday's opening range, which was the early trading range from the morning hours. So you have an early trading range here, second trading range here, and a third trading range here. Well, third trading range typically goes back into a second trading range. That's what we've done now. So we had this trading range here with the double bottom, this trading range, and we had this trading range. So we fell from the upper trading range into the lower trading range. Bears are hoping that we're going to fall all the way into the first trading range, which is close to yesterday's open. Still undecided at this moment what we're going to do. But no follow through for the bulls or the bears. Still under the moving average, still making lower lows. So can the bulls come back or can the bears take over? We don't know yet. Bears welcome this minimum follow through on the bar 3. 725 would be their first target, but I think, no, I don't know. They might get it. I think it's more likely that the bulls will get their break even and then maybe sell off from there. Go above 4, the bear break even comes into the picture as well. That would be 1075. So now we have 1275 for the bulls and 1075 for the bears, which the bears got, but the bulls didn't. So bulls are still stuck. Okay. You sold the bar 3 close as thinking, oh, follow through bar, and then you sell more at the 3 high, which you think is the start of the second leg. Then your break even is 1075, right? So the high and the close of 3 is 1075. You just got your break even as a bear. As a bull, you bought that too close, you bought that too low. Your break even is 1275. We didn't get that yet. So bulls are stuck, and the bears are either holding or they sold more and they got out. We might have to go a little bit more lower, but it's unclear. 4 really should have made a new low of the day for the bears, right? So you have a spike that already looks weak, but then the follow through doesn't make a new low. So bears not too happy. 15-minute chart is a bear bar, so that's better. But can we get to 8 and 725? Another bull bar after an inside bear bar and after the bears have gotten a break even. So can the bulls take over? Can we now get 1275, 14 and a new high of day? Or will the bears get one more leg down to 725? Bulls will scale in below this bull bar as well if they have to. So they'll buy this close, thinking it's a high 2. And if they have to buy at the low, 1075 will be their break even. But chances are that they're now going to get 1275. So it's just a bunch of limit order scalps that the market is offering and not much more. Still a tight range, right? Plenty of time enough to wait for a breakout and then buy the breakout. So you don't have to do anything in here. I'm taking a couple of smaller scalps so they just hit the 1275. I'm taking a couple of small scalps so that I have that part done in my daily schedule, and then I can focus more on the trading price action. So I scalped above 3 for the break even, and then I switched on the break even for bears. I switched back to the break even for bulls. It's basically breadcrumbs, but might pay the dinner. So what's the situation? Well, bears are hesitating to hold, right? They sold and they might have gotten out. Bulls are hesitating to hold. They bought here and they were offered a chance to get out break even, and many of them took it. So the bears were offered to get out break even after disappointing bar 4. The bulls were offered a break even after a disappointing 3 that went below their bar. instead of going to a high. So they all took the chance to get out. And so what's market going to do now? It's going to wait for the next impulse. And the next impulse will probably going to come from going above 3 or going below 5. And then the whole game starts again. But right now you can see that the price falls flat because it just gave bulls a chance to get out and bears a chance to get out. And so there's not much action now until we get a next move. The next move can still go to 725 for the bears, right? We made a new low. We didn't make a new high. And so technically we're making lower lows and lower highs since yesterday, bar 70. That is the argument that the bears are using. My all-time high is 50.3325 on back adjusted ES chart. The all-time high, the 5,000 on SPY is here, 50.2025, somewhere in that range. When I opened the session, I showed here S&P cash was yesterday high was 49.99.89. So basically 1 or 2 ticks above yesterday's high represents 5,000 on the cash index. 50-minute bar is inside the first 50-minute bar. First 50-minute bar was a bear bar. But look to the left, it's sideways for many bars and undecided if the breakout is going to be to the downside or to the upside, or first to the upside, then fail and come to the downside, or first come to the downside, fail and go to the upside. Just don't know yet. It would be more bullish if we can break the 3 high and of course break the high of the day. But there is this yesterday's opening range as a magnet where price could pull back to, so gotta be careful. There is this yesterday's opening range as a magnet where price could pull back to, so gotta be careful. Everybody has a different all-time high, according to the chat. There's no real news today. Tomorrow neither. So for this week, it's only been earnings. And then next week, Tuesday, is CPI again. So a little follow through for the bulls on 6. That makes them hopeful. Can they force out the bears on the 3 high? It looks like it. What do the bulls want? They want 14 and 16.25. Market is more violent if bulls and bears don't get the chance to get out break even, because then they have to run for the hills. But in this case, the bears sold more above 4 and they got out break even. So they're not really as stuck. So the bulls have to do it on their own. It's much easier if the bulls can get here with the bears still in that trade, then the bears have to buy, the bulls have to buy, and the result is often something like this, where bears thought that they had a bear trend going, but then 9 happens, and this is bulls buying and bears buying. And a bar like this is clearly an indication that there was a big trap, and everybody got caught on either missing this because you could not even buy the close of 8, right? So they missed it. Some bulls missed it. The bears totally had to buy back, and so higher prices is the result. In this case, it goes much slower because everybody was so friendly to give the bears a chance to get out. So nobody's really trapped here. Good chance that we're going to go back to the 16 close. On the 50-minute chart, the bulls got the 16, but they only got 1 chance to exit. And typically the market goes there again, giving the bulls a second chance to exit at that price. Bulls are trying to create a third bull bar and a close above 3. 3 bull bars, all in long now. So chances are that we're going to go 50-16. And then can we break out above 3 and get a measured move the size of 3 to 15-19-25? That would be the next. That would be a breakout target, but for that we need a breakout. And bars 5, 6, 7 don't make me feel like there's a big breakout coming because of it's by the close, but it's small. 6 didn't close above 5. So they can do it, but then bar 8 really has to be very strong, close above 3, close hopefully above 2, and then go to this. What is this? This is 15-19-25. More and more bears are giving up, getting out. We had a tiny little inside bull bar on the 50-minute chart. Its target 1575 and 1925, not accidentally the same as the measured move from bar 3. Bull should be able to get another stab at 50-16, especially if 8 becomes a bull bar as well. But we need a close above 3 to make bears understand that this is a serious breakout attempt, right? Because 7 was a failed breakout above 3. And a lot of bulls will be giving up if bar 8 cannot close above 3. So what do you do? Inside bar, probably no buyers above. So double failed breakout above 3. Bar 7 tried to go above 3 and break out, measured move up, failed. Bar 8 tried to do the same, failed. More and more bulls are giving up. They want to see a stronger buy signal, and they're right. And so bears are hopeful that they can get a second leg down from 2 and 3 to a new low of the day. I think the bulls still have the momentum, right, for bull bars, but it's okay to get out on the 8 close and reassess the situation to see if you want to buy again. It's a trading range, so as soon as you get disappointed, and 8 was disappointing, inside bar, bull bar, close below 3. So as soon as you get disappointed, you have to use that to perform action. And the action is exit longs at disappointment high in a trading range. Okay to buy again on a breakout and then follow the breakout. But right now, there's more chance of a failure. And I don't want to be the one finding out that the rest was disappointed. I want to be disappointed first. Musical chairs, right? So if everybody starts exiting, do you want to be the last one to exit, or do you want to be one of the first ones to exit longs? So we're hovering in the center of this upper trading range and this lower trading range. The upper trading range yesterday, I think, was this and this, right? So this range. The lower trading range, I think, was this and maybe here, maybe here. Okay, so you had a lower trading range, a breakout into an upper trading range, and we're now testing into the lower trading range. And then we have this lower trading range here, where we spent some time in, but we spent the open in here. So a lot of volume was there. It will have a magnetic effect, but the same can be said for yesterday's high, which is 5,000 on the S&P. And so which magnet will pull the hardest right now It's just balance. We're hovering around the open and we're hovering around yesterday's close. Still a tad more bullish than bearish, but not by much. Another bear bar close, another bear bar close on the 15-minute chart, another bear close on the 5-minute chart, but no close below this bull rally. This bull rally had no close above that bear bar, but at least it went above that bear bar. The 9 close is promising for the bears, but they need follow through into 7, and then they want to get 350. But I think it's not going to get too much of a follow through. I think we're going more sideways and we're glued to the open. If this becomes a strong bull bar, bulls will see it as a high 2. But it needs to be very strong because 9 was also very strong for the bears. So 10 needs to be very strong, preferably close above 9 to be considered as a good high 2. So it will be high or low major trend reversal because we had a bear trend, break of the bear trend, double bottom, and now we're forming a high 2. So bulls are hoping that this is the start of a high-low major trend reversal taking us to yesterday's high. But that bearishness from bar 9 is not easily erased. So 10 needs to show that the bulls are very serious, and it needs to scare the bears out of wanting to exit 9. The break even of 9 is at 12.25. When something's all in long and all in short at the same time, it's in a trading range. And we're taking out previous lower highs from the bears, and we're taking out previous higher lows from the bulls. And so you can argue it's all in long, you can argue it's all in short. But it would be nice if 10 closes so strong that they force all of the bears from 9 out without getting a break even. But if it cannot even reach that high, then that is already weakening their case. It's also right at the moving average, so you're buying the average price when market's not clearly bullish or bearish. So way too much of a 50-50 to talk about high probability trade. Of course, it gets a tail towards the close as well. But it is a buy signal that some bulls will take. And where do bulls hope that it's going to take them? It's going to take them to 15.25 and 17.75. And so probably also 16. Bears are hoping always the opposite, so they want to crush the 10 low and get a measured move down the size of our 10. That would take them to 750. If we're circling around the open, at the open, we're typically going to hit it at least 12 to 14 times. And so we've now hit it during bars 1, 2, and 3, bar 6, bar 7, bar 8, bar 9, bar 10, and bar 11. So we're already at 9 times. But it could easily become at least 5 times more. And it is a high 2. It was a good bull bar. It didn't go yet above 9. And it's still hesitating for the bulls if they're going to buy it or not. It's triggered, so it's triggered above the high 2. If they're going to buy it or not. It's triggered, so it's triggered above the high 2. And at least it's doing something. Can the bulls get 15, 25, and 16, and can they now get a breakup? Bears obviously selling above 9 for the 12.25. And now the bull's buying for their break even. And so it keeps acting as a tight trading range. Bull's buying below 10 for 11.50. Outside down bar, so clearly bears in control on this bar. Haven't broken even Globex high and low yet, so that's still 375 around here, and 1625 the high of 2, one tick above the high of 2. No, the Globex was already a tight range. This is even a tighter range, so it's a tight trading range. It's about 7-8 points. So not much to do for stop order bulls and stop order bears. Much more limit order scalps. So the next scalp is coming for the bulls if they can get 11.50. So nobody's really buying above things. Nobody's really selling below things. Instead, they're doing the opposite. They're buying below 10. They're buying below 5. They're selling above 3. They're selling above 9. And so it stays a limit on the market until we get a breakout, most likely. Is there a chance that this is going on the whole day? I've seen it, but it's not likely, right? I've seen days where the range is like this, maybe a couple of points more, super small range days. It can happen, but it's not likely. It's likely that we're going to go a little bit higher and also a little bit lower. But there is no breakout until there is a breakout. So the worst thing you can do here is guess that we're going to break out to the downside now that we're low. And then when we're high, guess that we're going to break out to the upside, because you're going to get whipsawed by these sudden moves like 10. So when you see 11, when you see 11, you think, okay, now breakout to the downside is coming. And it only went one tick below the 11 close and reversed up. So selling here, thinking, oh, I see a very big bear bar. Well, that bear bar just gravitates towards the low of the range, because in the middle, there's nobody selling. There's nobody buying. So price just comes down to the point where limit orders are waiting to buy it back up. And we need one more tick for the 11.50. Didn't get it. Oh, we got it. It's 11.75. There we go. So you can see what happens as soon as bulls hit that break even. Now, by now, everybody knows what's happening. So everybody knows to buy the 10 low to get out at the break even price. And so when that happens, it becomes much more accurate now that that is going to be the highest tick of that bar. And then we're going to go down to below 10 again. So bar 12 closed, and it closed as a bear bar, as a small bear bar. Its high was here, its close was there, and so its target is 505.25. On the hourly chart, you can see that here, where you have it, a small hourly bar with a tail on top and a tail below. Well, the tail below was obviously the bar 12 bull body. It's following a very strong bull bar that didn't get much follow through, another strong bull bar that didn't get much follow through, and another bull bar that didn't get any follow through. The traders are beginning to wonder, are we going to go to the low of this strong hourly bar now that it didn't get any follow through? What is the low of that strong hourly bar? That is the low of the first hour from yesterday. So that is 49.88. I said there's a chance that we're going to go back into the 49.80 area. And it might be without even touching the 5,000 number on the cash index. So we're still deciding what to do, but there is a chance that this is going to have a magnetic effect, this first trading range, and that we might have to come down here. Question, when you guys discuss situations, selling bar 3 and then averaging up, getting out even. It always seems to work well. 2 questions. Would you enter a half position automatically knowing you might have to average up? Could you talk for a second about situations where it does not work and describe the exits? Isn't buying 15 with stop below 15 a skunk stop? 15 here. Yeah, I would not put my stop below 15. I would scale in below 15, exactly. So you probably, well, your stop is here officially. I would not want to let it get hit, but chances are, if in such a strong bull trend, if you buy the first bull close, you're probably going to make money. If it would go below it, you're probably going to get out break even. If you get 2, 3, 4 bear bars below there, you're not going to get out break even, so you're going to have to exit. But this is so strong that the bulls are in power. So even if their close is not going to get followed through, at least they're going to have a chance to get out break even. I follow a rule of 2. So if the bulls can take out 2 lower highs from the bears, then they are probably owning the market. And if the bears can take out 2 higher lows from the bulls, they are probably owning the market. So at the moment, where are the 2 lower highs from the bears? Well, the first one is here. And the second one, I would say, is then here. Or just the high of the day, right? So if they can take out this one, there's probably sellers there for break even and we're going down. But if they can take out this one and this one, then all bears that sold the 11 close, selling more to get out break even, will give up and the market will go higher. That sold the 11 close, selling more to get out break even, will give up and the market will go higher. So yeah, Al would say put your stop below 8, and he is right. That is the beginning of the bull leg, and that is where the stop should be. I'm always scared to short the market. I only like to go long. How can I overcome this issue? By looking at the mirror chart. So the mirror chart is the chart that is upside down. So you see negative numbers here. So it's basically multiplied by -1. And so you're trading the normal chart. You have a second pair of eyes on the mirror chart, or you have the mirror chart in front of you. And when the mirror chart is clearly bullish, you need to be bearish on the real chart. If you really can't short the market, then you become a perma bull, so you can only buy when it goes up. I have like a super small screen for questions, and I see questions that are really long, so I have issue here reading the whole question, and I really cannot make this box bigger, I think. So bear with me here. Are we still always in short due to bar 77? 77. Yes, we're still making lower lows and lower highs. It's a bear channel. So if you take the bear channel, I don't care how you take the bear channel. Take the bear channel like this. Take the bear channel a little shallower, but we're still in the bear channel, and we need to get above 11, and we probably need to get above the high of the day to escape the bear channel. Why did your RTA chart have 81 bars when mine only has 78? Because I added 3 bars. This is how Al has been using the chart for years, and so I think we sort of all mutually agreed that we're going to use the same setup as Al. So for consistency. And yours has 78 because you're probably looking at a CFD or at something that's similar to the cash index, because the cash index will close at 78. That is the 10 o'clock close, or the 4 o'clock Eastern close. And then there is some post-market action. On a very slow day, how many trades might you do? And on a very active day, that depends completely on the price action. So I mean, the best days, you only do 1 trade, right? You buy 8 and you sell 67. So your profit to commission ratio is off the charts. because you only buy once and you sell once. But on a morning like this, you're probably doing 1, 2, 3, 4, 5, 6, 7, 8. So you could probably already do 11 scalps of 1 to 3 points on this alone. When people say impulse, are mostly talking about orders being triggered. I don't understand what you mean by that. So we couldn't reach the 11 high, so we're probably still going a little bit lower. We're trying to get to this 44 low, but it's not all that clear yet. Right now it's a little bit more bearish than bullish, but we're at the lows of a trading range, so not much to sell here with stop orders. No swing opportunity until now. It's higher probability for that after bar 6 or more, right? Yeah, on a strong trend from the open, your best trade is around bar 3 to 4. On trading range opens, your best trade is around 8, 10, 12, and 14. Yesterday it was clearly 8 and 9. Today there hasn't been a swing trade, obviously. Like we haven't even crossed more than 8 points. So, could you explain why you believe the bulls will get to 50.16 when they were unable to close above the moving average on bar 7, please? Because we hit 50.16, which was a target on the 50-minute chart. So exactly on a target. Usually you get a second chance to exit there. So I would expect that we're going to see 50.16 again. That was from yesterday, part 3. How do you create a mirror chart? That depends on your platform. So it's an indicator on Ninja. I think it's -1 in front of, times -1 in front of the symbol in TradingView. Now we get the bear breakout. So we are at the target of the hour, almost. That's 5:25. And the bears get a close below today's range so that they can double today's range to the downside. Or will they fail and close this bar within the range and continue the trading range? That's the question. So bear breakout, but what will the follow through look like? You can see that we're threatening already to close back in the range. Bears won't have it, so they just sold more. But you got to think about the fact that this bar is only 2 minutes old. Within 3 minutes, this could be a 10 points bull bar. So it's one of the reasons why in a bar I never sell or buy. I wait for a close. 5,003. We need to break as well this 6 we just did. That's good. It's not well and short on a lot of time frames. We got the 625. We don't get the 3 yet. So still trying. Bulls are still trying to make this a failed breakout. We're right at that bear channel line, see? Whether you put it here, you put it here, it doesn't really matter. Didn't hit Globex low yet. That's at 375. Didn't hit Globex high yet. That's at 1625. But the bears made money now for the first time selling a bear bar. So if you sold 3, you didn't make money. It didn't go a measured move the size of the bar. You sold 9, you didn't make money. You had to scale in to get out. If you sold 11, you haven't made money yet. You're still waiting for 425. But if you sold 14, then you just hit at least 625, which was one time your target. But look at this close. It closes all the way back into the range. So is it a breakout and now we're going to get a measured move down? No. Bulls are buying where the bears were covering. So they can still sell to this level again, but probably most of them knew that holding was probably not the best thing to do. So bears took profit and market reversed back up. It's still all in short. We're still in a bear trend. It's still a bear leg in a developing trading range, but we're at the lows and we just had a major profit taking area. So how many bears are now selling again? Probably not a lot. Was the failed breakout of bar 15 the result of trapped bulls who bought the close of 13 and 14? Some bulls were willing to scale in lower on the low of 44. I mean, it's a trading range and it's a tight range, so bulls expect that any breakout will fail. So if you buy the 12 low, or if you don't buy the 12 close, but you only buy the 12 low, you're expecting to get out at the middle of it. And so if the middle of that is 950, you can buy 650, 750 to get 2, 3, 4 points when it hits your break even. So bulls are very confident that we're not going to go much lower, so they're scaling in at this bar 15. The bears are also aware that we're not going to go much lower, so when they get their 1 hour target, so stop or scale in above 14, selling the 14 close, it gets to 625. They're very happy that for the first time in all of these bars, they get a profit equal to their risk. So they take it as well. Now bulls buy even more there, and the market reverses back up. Plus, anybody can see, of course, this channel. So a lot of bulls are just buying at that channel, and a lot of bears are covering when it hits that channel. This is a bear trend by definition, but it's much more a lag in the trading range. So bears covering at new lows, willing to sell again higher. Bears scaling in at lows, scalping out somewhere in the middle, somewhere at the lower end of the range. Not confident that we're going to go all the way to the top of the range. So I said, if bulls can crack not just one lower high, but 2 lower highs, I'm confident that they'll go higher. So 1 lower high is now here. The second lower high is now above 11. So if bulls can crack the 14 high and then the 11 high, I'm confident that we can go to yesterday's high. Without it, I still think we're going more sideways. 3 legs down, if you will, on the Globex 50-minute chart, but also just very sideways around 50.11. 60-minute chart, still very bad follow through on the hourly. Going higher, but bad follow through on every bull bar. 40 minutes left, so nothing yet to say about this bar, but we had a bear bar with some follow through. So that got profit target. Also touched that close. So this close was 5,006. This low was 550. So if you sold this bear bar and you sold more at the high, you made money getting out at your first entry. And so this big bull bar, bulls are expecting that we're going to go to 50.40 with it, but it looks like we actually might just go to its low, which is 49.88. You can call it an island top, and usually that gap here is going to close, but we can go much higher before it does, or we can just now go and make, it's already a double top, but we can make a double top and then come down. It's already a double top, but we can make a double top and then come down. But you can see that on the 60-minute chart, on earlier big bull bars, there was much better follow through than on this bull bar. Can this whole thing become a final flag? We go above it and then we collapse all the way down. That is a very well possibility here at these levels, which were clearly magnets. So a lot of bulls will take final profits in this region, all the way from 4,200. And so if this becomes hours and hours of sideways, and we suddenly go above it, maybe on Monday, and then come down, and all of this was a final flag. And then failed breakout above the final flag, and it coming down into 49.80, and even lower all the way into this range. This could be the breakout for the bulls. Basically a high 3, so a wedge. Less bears selling above 14 because of the profit target reached on 15. So there's less bears that need to sell. So bulls have more free play here. If they can break out above 11, then we'll go to high of day. And then 1550 is the first and 1519 is the second target. I said 14 times. It's now, what is it? 3, 6, 9, 10. Bulls are trying, but can they get a good solid entry bar on 16? Increases the chances that we're going to go to the high of the day. Increases the chances that we're going to get a breakout to 1950 and 19. A big tail on top of 17 would indicate failure and hesitation. A close on its high of 17 would indicate bulls being strong. It's closed on its high, so chances are that we're going to go to at least this 1550 and then probably 1519. And if this is the start of a swing, 20 points would get us to 5030, which is very close to the all-time high of 5032.25, 5033.25. What is the data box? Someone's asking what the data box is. So this data box is showing me the high, close, low, and open of the bar. I look at it all the time. I think you can also press, you can press the middle mouse button, but it gives me RSI and I don't like it. So I just always look at this. Because I get the prices, of course, when I measure. So 1550 and 19. But yeah, no, I look at the data box. It's just an option here in NinjaTrader. And I already, in these situations, I already calculate what the midpoint is. If I buy a close, like buy the close of 5, I already calculate what the midpoint is going to be of bar 5. So when I buy again lower, I know where to get out. So I do that when I enter. I already look at the alternative scenario. So bulls need one more bar, ideally, one that takes out the 11 high, lower high above 14, lower high above 11. They took out one convincingly. They didn't take out the other one yet, which is disappointing, but I think we're going to get there. Still think we're going to go to 1519 and 1550. Bulls had another chance to buy the 16 close, right? So not everybody bought the 16 close, but now everybody wanted to have bought the 16 close when they saw 17. Price came down to the 16 close. And so a lot of bulls took the opportunity to buy at the price where they would have wanted to buy, and price reversed up from there. And price reversed up from there. It also throws out the chickens that put their stop at break even. Question, a lot of traders are talking about a rule-based system for price action. How do you come up with strict rules for a fluid market with patterns? Well, if you think about it, that probably cannot exist, because then if I would not follow those rules, I would always lose. Or if I would take the other side of a rule-based system, I would always lose. So you have to have rules for different market conditions by default, right? In an environment like this, you probably have rules for selling above things and buying below things and knowing where to get out. But in an environment like this, you can only buy, and you probably have no rules to sell. Although you could have even sold, bear in mind, you could have sold the 9 close here and made money, right? So you sell the 9 close, you sell more higher, and you make money when it tests the 9 close. So I think rule-based is more in your character, in your method of action, right? So when do I get out? When do I get in? Do I solely buy high twos and sell low twos when it's trending, or do I buy below bars? Like, you have a method of just execution methods. I think that's where you hopefully refer to that. Once you have identified what type of day it is or in which environment you are, that the actions that you take are sort of thought through and set in stone. So enter here, stop there, target there, or enter here, stop there, target not defined, but somewhere in that area, or 20 points, or enter here, no, disappointing after 3 bars, get out, or enter here, entry bar not in my direction, exit break even. Like, so you can have rules like that to make your life a little bit easier in not having to constantly weigh your decisions, so that there is some consistency in your performance, because in the same situations you make the same decisions. If in the same situations you make different decisions, your performance is going to be too like, it's going to vary too much to get conclusions on whether you're profitable or not, right? You don't know, because in some situations you do this, and the same situations you do that, and then there's no consistency in your own actions. So I think you mean with rules that given the same type of situations, you handle in the same way. I said bulls need to take out the 11 high. They couldn't on 18. And so bears rightfully see this as a double top. But will it be a double top, and will it come down to at least 11? Well, that's likely, because that's the break even for bears. I think we're going to take out this top on a second attempt, but it is disappointing for sure. The 18 close was so disappointing that it didn't take out the 11 high, that you can see immediately all of the bulls that bought 16 or 17, they exited waiting to buy again. Is what I mean. In a trading range like this, when you get disappointed, you need to take action. So the 18 close is disappointing, traders exit immediately. Doesn't mean that they're not ready to buy again. They are. Like, this was very bullish and you're still expecting higher prices, but this not taking out the 11 high, I had this line here for a reason. This not taking out the 11 high was disappointing enough that bulls for now stand on the sidelines, ready to buy again if we now break that, what is now the 19 high and the 11 high double top. That's even more powerful, because if there is a double top, bears believe there is a double top, and then when we break that double top, we could get a measured move up to 50-23.50, right? But the bears have their break even. So 16 close, 16 high. 3 more bars that tested the open here. Can the bears get follow through on a double top short? 775 and 425. Do you think we're still part of spike and channel bull trend on the 15-minute chart Globex? Well, look at the 15-minute chart Globex. This doesn't look like a spike and channel, right? This was maybe a spike and this was maybe a channel, but with this bar, we fell out of any channel. So you had maybe spike and channel, or like this doesn't really matter. But this definitely fell out of character for what was spike and bull trend. Also, and I mentioned this, the 50-minute chart here, it's got 2 times target here, and this big bull bar got 50-15. So there was a lot of profit taken in that area. This is not spike and channel bull trend. This is sideways. Oh wait, this is 15 minutes. I'm sorry, my bad. The chart says 15 minutes, but the chart shows 5 minutes. My bad. My bad. But same thing, right? So bull bar, inside bull bar, another one. So basically have three legs. If we reach that profit target, 50-16, that's why I said on the open it's probably going to reach 50-16. But since then, a lot of overlap. This came all the way down. This went all the way back up. This is coming all the way back down. So no spike and channel bull trend here on the 50-minute. Oh, he meant RTH. Okay, we're going to RTH there. Where we go? RTH. Well, what do we see? Spike. Same. But where's the channel? This is already too much sideways for a channel. If you see this as a spike, I say within the first 10 bars, we need a new high, right? So if this is spike and channel, you expect maybe a pullback, but then you expect something like this. So you need a new high after that spike. This, I think, took too long to consider this bull spike and channel. It is sideways, so this was too much sideways, then this is too much sideways, and then this is a lower range. So I think it's way more trending trading ranges. So trading range here, maybe not on the 50-minute chart, but on the 5 it was. Trading range here, trading range in the upper range, and we're now trading range back in the trading range in the lower range, basically making this a bigger trading range so that when we fall below this trading range, we fall back to here, 49.85, 49.80 area. Now the Fiesta, the limit orders continues. Bulls made no money yet on buying the 16 close. Did they use the 19 to be disappointed, and did they sell their entry? Did they get out of their break even? They probably did. Probably some other bulls will hold, buy more, and then get out break even. Confident that we're going to have another attack at this double top and break out to the upside. They might be right. They're also confident that we're not going to go too much further down so that they can always get out. I didn't see if the bid actually hit that 50.12 or that it was just the last price, just the ask. But we can see, so if we just show bid prices, then the bid never hit that 50.12, so not all of the bulls got a chance to get out there. Follow through on 19, so double top bear bar. That's good for the bears. 725 is their first target. Can you sell here? I think it's too late, right? Because the calculation that the bears are doing is based on the 19 close. So they'll sell the 19 close more above 19, or they exit 19, but their profit target is based on the 19 close. So you sell the 20 close, you're selling too low relative to the bears that sold the 19 close. And same thing, if you saw the 16 and you were happy and you bought the 17, you bought way too high in the trading range. So selling 20 is probably too low in the trading range, at least compared to the bears that sold 19. Oh boy. Does the way that the NASDAQ is moving make you lean towards the bull side? No. I don't care what another chart is doing. There is no correlation between 100 stocks in one index and 500 stocks in another index. There is correlation of the stocks that are maybe in the same, but they behave differently all the time. Are there algorithms and short time frame algorithms trading An arbitrage algorithm between the two? Probably, yes. Yes. And when they differ too much, they'll revert back to the mean, sure. But that's not, then you have to take that chart and trade that chart. Like you can't say that something else is going up or down. I'm going to buy the E-mini because the NASDAQ is going up and down, or the Nikkei, or the Hang Seng, or the Bitcoin. It has nothing to do with this chart, really. So if NASDAQ is exploding to the upside and this is going down, I'm selling. No, that doesn't mean we cannot take a look at those charts. That's a whole different story. We can. So what is this? YM, so Dow Jones. Much nicer bear trend than what we're seeing. So failed breakout above yesterday's high. Or bear bars, you sell this bear bar here. And you probably already got twice your risk. Yep, there you go. You could have sold here, you could have sold here, oh, here, no, here, you could have even sold here. So super nice bear trend. So you can already see that YM's Dow Jones bearishness is not making me bearish on the E-mini. Thank you. Bullish. Okay. No trading range here. Breakout, a gap. Probably just going to get a measured move up. So all the way to a measured move, the opening range. So 17,920. Does it make me bullish on the E-mini? Well, what do I do now? Like the Dow Jones is selling, NASDAQ is going up, E-mini is going flat. So you tell me what the correlation is. You can't trust that stuff. Like it actually just adds more confusion to a chart that is already confusing. So don't look at other charts if you're trading this chart. If you want to trade this chart, then look at this chart, right? This is probably going up. Great gap, opening range, gap up, continuation to the upside, sure. So what do we say? Is it good to be long? Yes, because we had two big bull bars, but we hit our head against the double top. Is it good to be short? Yes, because we have a double top and we had a good entry, a good sell bar 19 with a good follow through bar 20. And so when it's good to be long and when it's good to be short, it's probably also good to be neither and just wait. Wait for a breakout above this double top or wait for a clear breakout pullback and continuation on the short. Average range of a day lately has been minimum 30 points. The top was 50.16. So if you take 30 points, we could go all the way to 80.85 area. If you take the low and add 30 points, we could go all the way up to 50.36 area. So if you zoom in on what a normal daily range is, and this is a normal daily range, we could still go all the way down here, 60-minute moving average. We still go all the way up here, all-time high. But there's plenty of space in what will become the daily range to wait for a breakout, a pullback, and then a continuation. So if nothing else, you can set an alarm at the low, you can set an alarm at the double top, and then when price breaks that, you come to the screen and you see what price is doing, and then you determine if you want to fade it or that you want to wait for the pullback and the continuation. The bears got to their first profit target again. The 19 close just hit 775. So the bears are making easier money than the bulls because the bears now make money without having to scale in. And the bulls are basically scaling in to get out break even. So they only made money on 5. Bears made money with 14 and they made money with 19. Money with 14 and they made money with 19. And the bulls need, of course, 10.25 to get a break-even price. The difficulty with trading in a range like this, scalping in a range like this, buying below 16, selling above 14, selling the 19 close, buying below 2. The difficulty is that as soon as you get a little confident doing that, and you've got, say, 5, 6, 7, 8 points in this range, that there's a 20-point bear bar that knocks out all of the profits here. So this is still, I would say, not something that I would want to learn as one of the first things in price action. You are the judge of your own experience level, of course. So you determine what you want and what you're confident at. But I'm saying that this is probably one of the last pieces of price action that you want to master versus trading this, or taking breakouts like this, or buying here a beautiful high 2 at the moving average. Those things are much easier to probably learn because stops and targets are much easier to define than limit order scalping techniques in a tight trading range. I do have to cover it here because I have nothing else here to cover. That this is the price action that we've been given. But I do realize that for many traders, this is something that you want to put in your trading development towards the end of the tools that you want to learn. So it's perfectly fine to indeed go to the Dow Jones and short it, or go to NASDAQ and buy it, or to just wait, because you know we're still going to get an easier trade that you can take. Either it's going to be a breakout above the double top, or it's going to be a big bear bar with an inside bar or something like that to sell on a move down. Inside bar or something like that to sell on a move down. Coming to the end of the second hour. First hour was a bear bar that didn't reach that profit target. And you can see how sideways we're going as well on the 15-minute chart. It's basically the body of a zebra. But will the zebra have its head down or will it have its head up? We don't know yet. And the longer this takes, it's now taking 20 bars, the longer it takes, the more equal an upside breakout versus a downside breakout is going to be. Right? We began with the likelihood of an upside breakout, but right now it's really 50-50. Is it reasonable to hold shorts for a swing, stop at bar 18, enter at bar 20? I mean, market is always in short with this, but why was 21 not a bear bar, and why did 22 not go further? So you're holding a swing in a trading range, in a tight trading range, because you're hoping for a downside breakout, right? 50% chance that you'll be correct and 50% chance that you'll be wrong. At the moment, maybe 53% that the downside breakout is going to happen and 48% that we're going to get an upside breakout. But you're you're holding a swing in a very much 50-50% environment. And so add the commissions and add some mismanagement every now and then. And how profitable is that strategy going to be long term? So yes, you can hold from 19, but holding from 20, I already said that's probably too low in this range to sell. And so again, I would exit on disappointment. Is 21 disappointing enough to exit? No, but the fact that everybody just took 1 hour profit instead of holding for a new low, that is reason for me to see nobody expects more than 5,775, right? Because that was a move equal to their risk, and once they got it, they all took it, right? And so now you're holding a swing. The rest of the bears took a scalp. So you could be right, but other bears are not betting on it. The problem with doing things that are not the best things is that they sometimes work, and that creates patterns in your brain to do it again, right? So you're selling this bar 9, right? So you get this big bull breakout and you're selling it, right? And then you sell more and you make money, right? Because 19 goes back to the 9 close. You think like, well, I can sell big bull breakouts. Somewhere in the back of your mind that now starts to become a reality, right? But selling here was like dumb. That is not smart. It's a big breakout. It's probably going higher. So the fact that you got out here okay creates this false thing in your mind that what you did there was okay and you're going to do it again, but now next time it's going to move 200 points higher and you're going to blow your account. So that is the nature of trading, that illogical things sometimes get rewarded, and it creates a thing in your brain that it's then okay to do it all the time. But if you're always in, that's what I said. If you're always in, you get a double top 19, you sell 19. Selling 20, I think, is too low. You got a chance here during 21 to sell 19. To that sell, it's much more reasonable. But even then, I would take 775. Now, can you sell again if 24 is clearly bullish? Yes, because 24 happens to also be the close of a bear bar on the 60-minute chart. And now you have some good follow through on the 60-minute chart. But you still want a new low of the day. And you still need to probably scale in higher if it goes above 24, because it's now one leg, two legs, 21, 22, and three legs, 23, 24. So you're at a wedge bottom. If it doesn't even close at its low, I would not sell it. So as a swing trader, is it better to stay off during days? No, you're going to get the swing, right? But you're not going to get the swing in this environment. You're probably going to get the swing now, or like yesterday, you get the swing here. Sometimes you have to try the swing a couple of times, like maybe sell here, get disappointed, get out, try the swing here, no, and then get the right swing. It becomes more and more likely that we're going back to this area, but need some good follow through. You can see that the hour closed with 24 and that there are market sellers selling the hourly close because 25 gapped when it came down. So can we get to below 5,000? Can we get to this range, this opening range of yesterday? Or are the bulls going to reverse it back up to above 24, making the bears wanting to exit at break even? It looks good for the bears. They got a new low. That was the minimum required, what they wanted. The bulls got out break even on buying 16, right? So during 23 was a bar that went up to grant the bulls an exit break even. And so bears were selling during the formation of it. Bulls were selling during the formation of it. And so it collapsed into the close. And now bears are selling. So it's still always in short. But we need a breakout really below this whole range to start to think about a measured move down. Question, good evening. I've been trading futures for 9 weeks and I'm still not consistently profitable. No kidding. Would appreciate your perspective. When the market does something much more strongly than what you think it was going to do you adjust your rewards? Do you go for bigger profit? Yes, of course. And it has to do with the rollover effect. Okay, so once a trend, look at the monthly chart here, monthly chart. This was a bear trend, right? I hope you agree with me. It was a bear trend. Somewhere here at the close of, I think it was October. Where is my thingy, my data box here? So somewhere here at the close of September, going into October, the 10-second chart was extremely bearish. The 1-minute chart was bearish. The 5-minute chart, the hourly chart, the daily chart, the monthly chart, everything was bearish, right? The first chart that becomes bullish is probably the 1 second chart, and then 10, and then the 1 minute, and then the 5 minutes, and then the 15 minutes. So it rolls over into higher time frames. So if you take a trade here at the low, exactly here on the 5-minute chart, and you go for a small reward, but then you get overpowered by the 15-minute chart and the 60-minute chart, of course you go for higher targets because you know that higher time frames are rolling into a bull trend as well. So a small trend, something that starts as a small trend, can become a very big trend because of multiple time frames. And that is usually in the form of a small pullback bull trend. So here you buy 2, right? So you buy here, bar 2. You're thinking, wow, I got just once my risk reward, right? But then you see 14 and 15. Well, that becomes 2 times risk reward there. But now you get more breakouts. So now you're starting to think, wait, other time frames here are rolling into a big bull trend as well. So now I'm, for example, measuring bar 1 to bar 12, 2 times risk reward on the hourly chart is to here, right? And so everything starts to roll over, and all of these other time frames become bull trends as well. So as a bull trend continues on, I am moving to higher time frames. So I'm looking at the 60-minute chart, what the target could be. I'm looking at the 15-minute chart, what the target could be. I'm looking at the daily chart, what the targets could be. And then maybe I find this level. So now I can just buy here and exit here. And a day like this, where I buy 49.50 and I exit 49.95, can just make up for a lot of medium to average or low performing days, right? Some big trend days in a month can really boost your overall performance. So you need those. So yeah, absolutely. When you get overwhelmed that you're in the right direction and you get overwhelmed by bars that are way bigger than you thought they were, you need to think about higher time frames. So this is a bar 9 close. It's a 15-minute chart close. So I'm thinking that 15-minute bar should at least get equal distance, so 1 hour, and we should at least go to 50.1675. So I buy the 5,003. I exit not earlier than 16. I make 13 3/4 points. How do you distinguish traders taking profits from a parabolic wedge or a small bull trend? I'm not sure what you mean by that. So how do you distinguish between traders taking profit and traders counter trend trading, or just the trend continuing? Well, think about this small trading range, right? What has this trading range to offer in terms of profit? 20 points? Definitely not. So you're not holding for 20 points. 5 points? Maybe. So some traders will take 5 points. I'm looking at 1R and 2R. So I see that if you sold the 18 close, that a lot of traders were very happy with 1R, right? Because that's the only thing they got on 14. So as soon as they get an equal distance entry to their scaling level or to their stop, they take profits. And so if they're doing that, you need to do that as well, because chances are you're not going to get much more. And so this is where traders are taking profits. Now, what is a parabolic wedge? A parabolic wedge is, if you're thinking, oh my gosh, how is this possible? What? This is just going straight up like a rocket. If people in the Discord are using the rocket as the emoji, you know that you're in a parabolic wedge, right? Because it just goes beyond imagination how steep it's going down or how steep it's going up. And you think that it's the end of the world when it's selling like that. And you think that it's, heaven just opened when it goes up like that. If it goes up much deeper than any channel or any line that you can draw, you're in a parabolic wedge. And that's basically the definition. So a wedge is something that is equal in 3 parts. If the 3 parts are unequal, or if the size is parabolic, so parabolic like a parabolic chart in a math diagram, then you know that it's unsustainable, right? So it's a parabolic wedge top. How do you determine always in? I think Al did a great chapter on that in the books, and also there is specific videos. So always in, higher highs and higher lows, probably always in long, 3 bull bars in a row, 3 bear bars in a row, probably always in short, a big bear bar outside down, outside up, always in long, always in short. Basically the question is, if you look at this chart, no, gun to the head, is this going down or is this going up, right? And you have to give an answer. Well, that answer is you're always in direction. So if I have to make a choice, if I have to enter the market, would I be long or would I be short? I would be short, right? We just made a new low. So I would be short, but I don't want to be short because I see a wedge bottom and I see a big bull bar 25. So I don't want to be short, but no, if I had to choose, I would probably guess that putting a short in the market has a better chance than putting a long. That's the purest definition of always in. On this topic of experience level, a beginner might reasonably just pick high twos and low twos, gap bars and maybe II bars in a trend, and scalp and swing. It demands patience, but probably the best thing. Yeah, I think focusing on one thing first is already a good thing. I mean, there is going to be a good swing, a good trend day probably once a week, and there's going to be a good swing probably at least 3 times a week. And usually you'll try to find it and run a lot of break-evens. So maybe you indeed sold 20, right? Now you see 25, you think, swing short is not going to be it today. Maybe you tried it on 7, you think, swing long is not going to be it today, so you get out break-even after 9. And so you try a couple of times until you find the right one, and you're going to find the right one. Here, after you saw bar 4, you know that we're not going to get a 20-point swing short. So you get out, and then maybe you try again on 8, or you definitely try again on 9. And so you find the swing there. Here you might want to wait. So 3 is not good. Like it doesn't close below all of these highs. 4, 5 is not looking good with the big tail, but then 6, great looking short, new lows, close on its low, so you sell there, try to get the swing. This one that was easy, probably bar 7, just sell the close and go for 20 points. So there are enough, like here you have to wait as well to bar 15 and then probably get the swing up. So it's not unreasonable to having to wait 1 hour, maybe 2 hours before the swing presents itself, but it's gonna come, and you're gonna get a lot of break-evens at the beginning, and then you find the right swing. So is this the right swing? It might be 5,009, 5,029 for 20 points. Well, it might be that 25 is the right one. I would definitely try it if I were going for a swing, because it looks reasonably good. It's a failed breakout. We're at a double bottom on this bear channel. We broke the bear channel here, so you can call it a lower low major trend reversal. It will definitely scare out a lot of bears, bar 25. It goes above 24, so that's good. If it now can take out the double top, it's going to be even better. On a huge bar, do you use a price action stop or possibly 60% of the big bar? Al mentions both. I use price action stops only. So if I trade anywhere in here, I want my stop to be there. If I trade basically anywhere in here, I have my stop here. So if I short here, probably want to have my stop here. No, I don't like stops at like a percentage or points or whatever. But then you don't have to get your stop, like you don't have to let your stop get hit, right? I mean, if this was 3 bear bars on the low, I would not looking for longs anymore. I think we're always in short. So even though I had a stop there and I would be long, I would just exit, buy again if it reverses. Reasonable to go long at 26. Well, if you want to go long, you go long at the close of 25, or you wait for the bears to get their break even, which was 825. They just got it, I think. I mean, it hit 825. I don't know if they got it. But bears don't want, bulls don't want bears to break even. Bulls want bears to get stuck, trapped, give up. And so the fact that they got the break even makes the bull case actually weaker, right? So we can still go long, we can still go lower. 15-minute chart, good follow through entry bar on the short, but not at profit area yet. So they would need one more tick and 5,000. So if these bulls get trapped, that is probably going to set up a measured move. So that will be 4,999. That's why I say I don't like one lower high to be taken out. I would like to have two higher lows to be taken out. Good looking bear bar from the moving average, close on its low. First bear bar, in fact, to close on its low, except for 9. And it immediately started selling, so 27 is good. Can the bears get all the way to 40.80? Or are they going to stall here? This is a brilliant question. How long does it take you? How long did it took you to get rid of stupid things and become consistently profitable? I am the living example of being consistently profitable and still doing stupid stuff. I want to say that I probably do stupid stuff every day, but related to trading, maybe not every day anymore. But I certainly do stupid stuff every day. But yeah, no, eliminating mistakes is a lot of what you have to overcome. And most of the mistakes are not mistakes that you're doing because of an error or something. Like you don't accidentally trade 3 times too big, right? It comes from an emotion or it comes from a frustration. You don't accidentally just go long because you're frustrated with this price action that doesn't give you the signals. No, that you do that because you have an urgency and the market doesn't have an urgency. So you try to force your urgency onto the market. The market is not sensitive for what you want. So mistakes are not, usually they're not operational mistakes. Operational mistakes are like when there's still a stop in the market and you leave the desk, or there's some limit order dangling, or you're looking at the wrong contract, or you don't know that it's FOMC or something. Like that type of stuff I have indeed eradicated. I don't do that anymore. Sometimes a lot of things that I do, I run like a mental or even an explicit checklist. Like pilots know how to fly an airplane, but they have to run through checklists every day, all day. So it's there to protect them, to protect the passengers. And so when I typically close my desktop, for example, I typically check a couple of things like, are there no orders? Like, what is the status? Do I have all of my executions in the journal? Like, just a couple of sanity checks. And same in the morning, same during the day, to prevent mistakes, right? Everybody checks the news. Is there FOMC? Is there CPI or whatever is there going on? So that those are just like when this daylight saving time in the US versus Europe, like all of those stupid things that you had once or twice, you promised yourself, okay, that's not going to annoy my trading anymore. I've eradicated those things. The other things I think have nothing to do with mistakes. They have to do with you, and the reason why you do those things is what you need to fix. So, but yeah, if the answer is, are you still stupid? Yes, I am full-blown still stupid, and I make a mistake or something every day, but I know how to quickly fix it and make it right. And I don't get bothered by it. Like, oh, I just bought 1 or 2 contracts too little, too much, wrong price, a tick wrong. Just fix it, get out, or whatever. What is the follow-through on 27? It's not strongly bullish, but it's also not a good follow-through bear bar. Every super good trade has follow-through in the direction of the trade. So the sell of 27, if it was good, it should have been a bear bar. Okay. On that premise alone, I would want to get out if I sold the 27 close. You can give it 1 or 2 more bars, but if you think about it, more than 50% of the traders were not selling the close of 27 because we went up. So the best thing as a beginner is to risk small, never add on, and try not to trade every single day, but the best days only, and wait for 6 to 7 bars to catch a swing. Yeah, that's probably about right. At least to know what is your thing that you can easily trade and do good, and then trade those things. And these tight trading ranges, they're so annoying. You can make a couple of points, and there's some easy points and there's some difficult points, but you can make a lot of points here. But the fact is that when you now get an enormous bull bar or an enormous bear bar, there's a chance that you're gonna piss away all of those tiny little point scalps that you made in 20 bars. And what's that gonna do with your emotion, right? So you feel really good that you made 10 points here, but what if now the breakout comes? Are you going to be so terrified, or are you going to be on the wrong side and then that breakout is going to continue? If that's the case, and that's a lot of times the case, then you're probably better off waiting and just trade the breakout. When you decide that a trade has failed and get out when you were in the trade, well, if I take a trade and the entry bar is not in my direction, I'm already very willing to get out. Because if I take a great trade, at least I think that every trade that I take is going to be the greatest trade of my life. So I'm already not feeling good about myself if I sell 27 and 28 is a bull bar, right? I'm already wanting to get out. Maybe I'll give it 2 or 3 more bars, but I want action immediately. The best trades, look at here, the best trades just go immediately. This high 2 just goes immediately in your way, at least a tick or so. If it's just completely the opposite, I'm already thinking of getting out. So I don't like that. And then sometimes I see the other side. I'm like, oh, this is actually a good buy. 28 is a good buy. We can go here and here. If I see that, then I just immediately click reverse, or I click at least exit short. But I am not considerate and caring about the trades that I have opened. Like, I kill them all with kindness directly when I want to. Like, oh, dear short, maybe it's going to work anyway. No. Like, if 28 is a bull bar, 29 is a bull bar follow through on a 27 short, time to get out. Is it logical to go for a swing on bars with high prop like yesterday, bar 9 and 10, because you're risking a little high and trying to make 2R? I mean, you have to have low probability to make 2R. I think, right, that there's a huge probability that after bar 9 we're going higher, right? So at least you would expect at least 505.75. You can also wait a pullback and then trade that pullback. But if you get 9, chances are that you're going higher. Maybe I don't understand your question, but so bulls are taking over slowly by slowly. Still need to get this little double top out of the way. Need to get 27 high out of the way. But it is a really nice setup for potentially a measured move above that double top, right? So that would be 50.24. Still too early to say. I'm not stepping into this yet, but that is what the bulls are seeing. Like a breakout above this, then a breakout above this double top, and then 50.24. I don't think it's a good long yet. So it's still, I mean, we just made a new low, so I'm not all in long yet. And I'm flat here, but I see what they're doing. I see what they're trying to do. I'll join them somewhere in here, and certainly when they break the double top. Can you show us how you traded the DAX today? Sure. So DAX, a little smaller. DAX opened with yesterday's close, was always in short already since the pre-market. So here was a great sell for 2 times risk. And here you got a big breakout. Had some follow through here, double bottom, which failed. And then this was a great long. This was a great long. This was a spike and channel bull trend. So if you bought here and I bought this close, you could ride it all the way here to this area, wedge top, and then sell off into the close that I didn't trade because trading room started somewhere here. I traded right up until here. So, but here big bear trend. You can also say big bear trend, break of the bear trends, higher low major trend reversal, and then bull and spike, bull and channel, bull trend. I traded the Bund this morning as well, so that was the Bund German interest rates, also trading range day with a big bear trend. So bull trend in a wedge, and then bear trend, measured move. I think of the daily range, I haven't checked it because I wasn't there till the close, but yeah, breakout and daily range expansion to the downside. So great shorts all the way through here. All right, so can the bulls get a third bull bar, which would considerably strengthen their case? They have the 975, that's good. Something here is suspicious. And the suspicious thing is that the entry above 25 was higher than the entry above 28. So you got a discount for taking the second entry. That is suspicious, and it might be that we're not going much higher because of that, right? If you take a second entry, you usually pay for the information by a worse price. And here you got a better price. So at 2 times risk or at 1 time risk at least, are we at 2 times risk? Yes. We're exactly at 2 times risk of 28. There might be more bulls taking profit here and bears selling there, and that we're going to go much higher. When you trade days like today, you read bars differently from days like yesterday? Absolutely. Yesterday is just a pleasure to trade, right? You just buy below every bull bar, you scale in, you buy 15, you buy 20, buy more, buy 24, buy 27, take 2 times profit, buy again 39, fail breakout here. It's just a pleasure to trade, and you only have to trade in one direction, just pullbacks, pullbacks, pullbacks. Market never goes really always in short. Maybe here, but you see failed breakout. Set profit target for bears. So you know that a lot of bears give up here, and then 39.40, you start buying again. You just constantly are looking to buy, which makes life a lot easier than having to decide if you want to sell or buy in the first place. So yes, I trade this much differently than this. This is also, for me at least, way more exhausting. So we're at bar 30, which is normally the time that I'm about to give up or start thinking more about dinner than about trading. So I don't know, if the day is a small trading range and I have like a point or 10 here, or at least more points than the daily range, I'm really happy with taking what I have and leaving the screen. Of course, you trade this much differently. Like you just look at the short, you short this one, short the here, and then here. See this as a third leg down. So yeah, like days that just have a strong direction one side or the other have, for me at least, are way more enjoyable to trade. Also make more money because you have less commissions, right? Guys, I need to check if I have someone coming behind me. And I do. Brosk is probably already in the stables waiting to come out. So let me see if there's any more questions or things. So what is the conclusion? Where are we going, up or down? votes. So let's start with the 60-minute chart. Okay, 60-minute chart, 3 bear bars, 1 big one, bear bars getting bigger. First pullback will probably fail, probably going to get a second leg down, right? That's 60-minute chart. 50-minute chart, strong bear bar, good entry bar if you sell that close, but hasn't reached any profit target yet, so bears still want to go lower. Bull reversal, this bull bar actually got profit because that was 2 times profit target, so some bulls are exiting there. We're hovering at the moving average. So 50-minute chart, 60-minute chart says bears, 50-minute chart says maybe bears. They had good follow through on this bear bar, but they haven't reached any profit target yet. So if we go above here, that double top, we might go higher instead. 5-minute chart, we just had a new low, but bulls bought it massively and we're back inside the range. So we fell out of this range once, immediately returned. Then we fell out of this range again. We closed here, and on the next close, we immediately returned. I think if we're going to fall again, bears are not going to buy it back up. The bulls are not going to buy it back up. The bears are going to push it further down. If we're not going to go down, my eyes are on this double top. If this double top fails, then I think for 50-24, measured move target 25 low to the double top to the upside is going to be the target for the bulls. Right now, I think a lot of bulls took profit there at that target, and so they're waiting for another chance to buy again. So if we get a big bull bar, if we get a series of bull bars that takes out this double top, I'd be willing to hold and look for 50-24. If we now get another low, I don't think the bulls are going to buy it again. I think we're just then going to fall into this range from yesterday. So really still undecided at this point, despite 30 bars of price action. And with that, I'm going to leave it there for you guys. So calendar says Rose is going to step in. Let me see if she is here. She is already here, so she's probably knocking on my virtual door to get out of my office. So I'll leave it there with you. Good trades, everyone. I'll be back next week. Chat again then. In the meantime, wishing you very good trades, and see you next time. Thank you, everyone. Bye-bye.
Hello, everyone. This is Rose. It's the midday session. Fed Barkin is speaking right now. He's talking about the interest rates. So you might see some up and down fast movement here. Okay, so today we have a 10-point range that bulls and the bears seem to be going up and down within. Now, one thing that you guys need to notice here is that every time the price gets back to the EMA, 20 EMA, there are limit bears waiting there to sell, and they're making money, and they keep trying this. Now, earlier, I did some long trades. I did some short trades. And then this was my last short trade because I saw double top here. So I was kind of hoping the bears would sell, and we kind of got that target. That was my target, and then we got my 2-to-1 target right there. And then I sold again with bar 1920 with the stop above 19. You can either measure from here. We didn't really get that target, but we got another target, which you got a double top here, you got a double bottom here, is failed breakout, bulls take over. And anybody who bought here, the problem buying here, you're kind of buying in the middle of the trading range. This is the trading range, okay? So say this is your trading range, and if you just extend it out, you're kind of buying in the middle, right? So if you actually draw a line here, you guys can hear me, right? Okay, I didn't check. I mean, all systems go, but you never know. I could be talking to myself here. Anyway, so here is your 50% is you buy here. you're basically hoping to test up there. Yeah, that's good, but you're in a trading range, right? So you have to kind of wait for bulls and bears to have 3 legs. So leg 1, leg 2. We don't have a third leg for bears yet. And for bulls, leg 1 is, what else? Is leg 2, and then they got the leg 3. Why aren't they breaking out? Well, they're not going to break out. After the leg 3, it has to come down to the 50%, and then you see a trap, then you can buy. Then you also expect the pullback, and then that's your rest of your size of your lot should be added there. So what happened is they got the third leg, and then price comes down to the 50%, but then it closes below the 50%. So now I know that they've got trapped there. Knowing that the bulls are trapped there, they're going to be forced to buy here, hence bar 23. They just bought it and they had a break even, but no bull bar. So now you're going to expect another leg down. So I have measured this initial balance zone breakout, I call it. It's basically failed breakout twice, which is double top and double bottom. Failure of a failure is a swing. So I'm trying to determine what that swing is. Is it a bullish swing? Is it a bearish swing? So I kind of got the idea. Okay, here's a failure of another failure. Heck, this is a failure. So what did I do there? I'm just trying to remember. I think it was like my target was right. Yeah, I took the bar 13. I actually made a mistake there. So I sold this. I was kind of holding it into 5,004, and I kept posting on my Discord. I'm still holding. I want to get there, but then I started to. I think I measured this wrong, because I kind of took the breakout that should have been either from this bar. Look how close it's gotten here. So what does this mean? I should have taken this one, but still I wouldn't get the full target there. But anyway, so I exited as this started to go up, and I was done. And ever since I've been flat. But now I see failure of a failure. There's a much bigger initial balance zone here. So you can take this. Is a swing. What are we looking for? We're looking to enter at the lowest part of the trading range. That's kind of defeats the purpose. And a really nice bar, but probably there will be a low 1 sell. Or low 2 sell. Since this is low 1, that's low 2, then maybe you can look to buy again somewhere. So if you actually divide the lower into 2 sections, right? So you have 2 sections, 1 and 2, and this is the lower section divide. So we actually dipped in, and then buyers show up. We came back in. So if the buyers show up again, meaning we close above this 50%, we could go higher. I don't know. I mean, every time the bears are selling, it turns out to be a scalp, about a 10-point scalp or 5-point scalp. Since if you measure from here to here, that's about 10. For the limit orders, if they're selling here, you get about 5 point. Okay, so it's a 10-point swing from the highs of the trading range, but really is a 5-point swing in reality, is all that it's giving you. And a 5-point is not a swing, it's a scalp. Anything more than 5 gradually becomes a swing, and a 10-point is your swing target. So if I'm not making any more than 5, I must be in a trading range, right? You have to think of that. But now I see, you can even actually measure this. Since this is your trading range, you can divide it into 3 sections. I have templates for everything, except that I forgot. Oh, here, there it is. So if I actually divide this into 3 sections, now look where the buyers are showing up again. This time they're actually printing consecutive bull bars. All the way down here we had consecutive bear bars. Only here, 19 and 20, and nothing. And then right here, but they got trapped. Okay, that's great. Consecutive bear bars, but everybody got trapped. So how reliable is this? It's not. So I think the market is now trying to get back here. There might be some sellers here because we made a new low. Okay, watch out. We made a new low with bar 25, brief low, but we made it. So you can see that we're making lower highs and lower lows. It's a trending trading range. I don't think market is ready to swing yet, but since everybody's buying here, they will be scalping here. It could be the midpoint or the midline of the upper third range that they might actually drive and take profit. Okay, so if you're buying, I'm going to buy now. Just put a 1 contract order. In fact, I'm going to make that 2 now. So I just bought with 2 contracts, and I'm going to see if I can actually test the close of yesterday or close. Is that? No, that's not close of yesterday. This is close of yesterday. This line, that black line is the midpoint. Open of the day might be actually the target. So the open of the day is 1325, and you heard Tim said that we're probably going to test it like 14 times, and I think I don't even know how many times we've tested. So I'm going to take his word for it, and it looks like that's what we're trying to go again. It's really annoying, but it is what it is. You trade what's in front of you, right? There's no complaining. There's no crying in trading. There's a lot of crying in trading. I can talk about that, but let's not talk about that. But once you get over your crying and your sentiments and, human emotions, and you start closely to chart and apply what you learned in the Brooks price action course, then you become a robot and you know exactly what to do. There's always a trade to make a couple of points and walk away green every day. So like Tim Stout said, is don't be sentimental. Don't force the trade. Don't force the market or your emotions on the market. Just trade what's in front of you. So bar 25, failure of bears. So I don't know if we're going to get a swing, but let me show you a chart. Here's a failed breakout below the trading range. If you take this as your trading range and a bad price action right there so here. So say this is your trading range. That's a failed breakout below the trading range. Started some kind of a swing. We're getting now consecutive bull bars, and the bars are kind of strong. So you kind of know that bulls are having the upper hand there. Now this is at the end of the day, we get a really nice breakout. Not so sure that's us, but you see every test of the EMA is rejected. Even above the EMA is rejected. There was a better chart. Oh, here we go. This one's the bear version. We ended up actually selling the EMA. So we're above the EMA. Really nice bar. So this is leg 1 pullback, leg 2 pullback. We're in leg 3. They're scalping here a little bit. I didn't scalp anything because I kind of entered late in the third leg. I'm just looking for follow through. There's one more chart I want to show you guys that here's another one. We came back down more before actually reversing after the midday. So around like bar 50, we have reversed. But we're not selling. Could this be here? No, not necessarily. So they didn't really sell, so we must be going up. So I'm still going to wait. If I'm going to sell this, I want to sell in here, even if it just breaches a little bit. This red area is my sell zone. I like to see market go there and test it. The other option I have, this right here, kind of a small pullback bull trend, wanting to go test the highs, but it's not able to take out those double tops. And then finally, it starts to swing. Let me take a look at the Fed Barkin is still talking, still saying things like interest rates. There's a 30-year bond auction. Ooh, brace yourselves. So that's 1 o'clock. So about 42 minutes, we're going to have a 30-year bond auction. That bond auction can create a major swing, whether it's bearish or bullish. Now, if that's what we're going to do, late bear, this is too late. Well, we might actually start even with bar 40. okay, this is bar 34, is maybe bar 40. Or we're going to go up a little bit around bar 48, 130, but that will be too late. So I think if 130 is around 48, bar 48 and 50, I'm guessing around 42, 43, bar 42, 43, we might get a swing down. Or we're going to get a bullish reversal back up, one or the other. But that 30-year bond auction, we had this before, and everyone was asking, what was that? Well, it was on the news. It said bond auction. And we're going to get something like that. And this is, I think, the reason market is in all sorts of sideways, up and down, stuck in a 10-point, because it's a breakout mode. It's going to exit out of this mess soon. Now, we do have a head and shoulders pattern, but it's very bullish. Look at the bull gap here. Look at this messiness, but it doesn't matter. If bulls start to show up, they can invalidate this head and shoulders for bears. You know what to do. You just find your left shoulder area, which is that, and you wait for bulls to start breaking above it to invalidate. Otherwise, from this side, I'm going to take that. I'm going to take this one because this is a very complex left shoulder. This could be the whole thing in a head right there. So we could end up going in here, first here and then here, and then sometime around 1 o'clock when the 30-year bond auction rolls in, we get a major rejection from it. Or we're going to break above it, and here comes the all-time highs. I still have the measured move target from yesterday's structural breakout, and we're inside bar so market really needs to decide here since this is a spike and pullback and we're in a channel, I bet we're going to make another high. So here's your spike, pullback, we're in a channel, comes back, we're coming back. If we can find buyers and the catalyst could be 1 o'clock, we could easily get that. We might even actually reach here, who knows? I don't know. I'm more interested in the all-time high. I'm more interested in above the all-time high, which is the measured move on the daily chart. It's not so far away. It's about 35 points away. No, wait. Yeah, about 30, 35. Yeah, it's about 35 points away. And that's nothing. We get a trend like that, we'll hit that. That's the end of that whiteboard discussion. So look what just happened there is we actually breached into the upper third of this trading range, and immediately they started to take profit. Can market sell again and make a new low? This area, I don't think we have tested it enough to say that this can sell strongly. I think we need to go a little bit more before we sell anything. I mean, this could be still target here. And the other one, it's a small range. If you go to the part, let me get that, hold on a minute. So click on this right here, type small range. Okay. Starting with 178, I'm looking for 184. So here's a small range under the EMA. Bulls have a higher low reversal up, and they test it, and it comes back down. And then around 1:30, this is almost 1:30 p.m. with bar 48 or 50, they get a really nice swing that lasts 24 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Actually, that is 24 with this bar. So you got a 24 bar. That means 2 hours up trading with a nice pullback to enter again. We could get this one. The other one, that could be us too. Look at the, I don't know, this requires for us to come back down again, have a low with 25 and 15. but I don't know if we're going to be able to do that. The one that I'm interested in is this. So for the bear case, again, we're going up right now. You see this? Up, down, up, up, down, up, down. So the third, upper third cells, I love these slides. They're like, follow the breadcrumbs. Don't think too much, just follow the breadcrumbs. And one of my favorite ways, I'm not a super user. In fact, I think I would like Tim and Brad, Tim Fairweather and Brad to train me on this one day. Just, here, stupid, this is how you use this slide. I'm scared to ask Richard because I know he's going to yell at me. You've been working here for 1 year, you don't know how to use this. And the reason why I'm not a super user of the encyclopedia, I just love doing this. Because this is actually a great way to brainwash yourself. In the torture rooms, if you ever visited a torture room, they tie the people and they play, metal music and pour water on top of you. And then they run these screens in front of you with very fast moving screens. They show you the same thing over and over again. By the way, this is a Hollywood movie scene that I'm reciting, not a real torture room. But it really is effective. So this is what I do every day for 10 minutes, 15 minutes. Oh, I remember that part. I remember the setup. It was somewhere. And I remember it's a trend, so I know it's all alphabetical order. It's dummy proof, or I should say rose proof. And I go there and I find it, more I start doing this, it started to kind of like writing on my brain that you have seen this slide at least 50 times, and go back and find it. So that's the whole, thing that I'm trying to say. But anyway, so slide 184, let's get back to it. I don't know, can I actually, if I put 184, can I actually get there? I bet I can. Oh yeah, right here. So it's 184. Here we go. And that could be us selling. So be careful there because it's very similar to what we have today. Okay. But right now, I'm making money by going long, and nothing spectacular, but I'm looking for this area to be tested. Yeah, we could do a torture room, Inc. We could do non-profit organization of torture room. I was having a bad day, and that's funny, trader chick. Oh, the movie it's Red Sparrow. I think it's what it's called. I watched it like 3 times. I love that movie. And I'm not a spy kind of. It's very hard to understand what's going on in the spy movies, but older I get, I started liking the spy movies. The actors and actresses, it was good. Everyone was acting really, really good. And that's the whole thing. Jennifer Lawrence. It's a 2018 movie. Right there. These are really good. I love this guy. Both of them. And this, oh my gosh, Jeremy Irons. Really good actors. So. Yeah, she's quirky, but she acts well. Okay, so I'm still holding. I want a little bit more. Bulls 2 let's see what they can test here. Yeah, I'm looking for 50-14, but you see they're already taking some profit here. You can take profit here, but I'm looking for a little bit more. Maybe 50-14 test, but I'm going to shave one contract here just to bank it. And I have, oh, wait a minute. I was actually with more contracts in. So I shaved 2 contracts. I'm still holding another one. And if we start the swing, my target is, or targets are 50, 15, 50, 16, 50, up to 50, 18 area for now. But we might actually go even higher if this turns out to be. But there's a major resistance starting at 50, 15, okay, goes to 50, 16. So it's a 1 point area. So watch out. 50, 15. I'm going to mark the 50, 15. And a 1 point above is major resistance. And we kind of already found it. Why? Because it's that is left shoulder area. I'm sorry, the right shoulder, possibly go all the way up. So I shaved 2 contracts. I'm holding 1 contract. And I actually entered is right with this bar right here is, let me see if I can actually show you. Oops. Oh, wait, I don't want to show you my account name, so just give me a second. So is I have only 1 left, and if it turns out and starts to come down here, I'm not going to let it go. I can actually put my stop to break even because it can certainly come down. So I'm just going to put it at break even. If it kicks me out, that's okay. With the next bull bar, I'll buy again, but I don't want to lose since I only entered with 3 contracts. So is you can either have a break even, or better to put it right there. But if it starts to come down, you're going to have to hit close and exit out. So I am, I'm going to put it up maybe higher yesterday, since we seem to be still advancing higher. If we close above, I'm going to add 1 more. Okay, now I don't want to lose anything. Or I don't want, let's see. See if it just goes quickly. Because I'm on the 3rd leg, okay? I don't want to lose anything. I'm on the 3rd leg. And the 3rd leg, I'm kind of scaling in, which is not a good idea. But I'm expecting a little bit more for bulls to push this. So I have nothing to lose. If it kicks me out, it will kick me out, and I don't care. I've already made money here. And it might actually kick me out. I think it's going to kick me out. That's because I'm playing very safe here. I already made my money earlier, so I'm just playing around. Okay, so I'm kicked out, but that's okay. Why is it okay? I lose nothing, absolutely nothing. And that's how you should be trading, okay? So if you're not sure, like a day like this, up and down, you're in a trading range, you're kind of scaling in, you already scalped, and you're scaling in more and more, you're not so sure, you're at the top of a trading range, maybe play safe so that you don't have to cry about it when it turns on you. Because it's easier to sell this and make money if the bears actually show up. Otherwise, I see another bull bar, especially taking out this midpoint, I'll buy again. Most likely we're going to break out and we're going to go all the way up here. All right, so just clean this chart up a little bit. I don't see a bear bar here. Well, normally you should be using the lower highs. Since we broke this structure with a bull bar, that's a pullback. If it closes bullish, your stop should be underneath 35. Okay, but mostly stops are going to be here. So I'm flat, and I do trade as I call these levels, and I see a good bar, but scaling in on a 3rd leg, leg 1, pullback, leg 2, pullback, leg 3 is never a good idea, especially if you're here. But I wanted to show you that I was already fiddling with that trade. So now I'm flat. I got nothing. Bulls need to close is above this trend line. We have a trend line break, and we're coming down and testing, but trend line could be also from here. That means we haven't really broken. Okay. So decision is being made. Are we going to sell here, start swinging, taking these out? Okay, is because there's liquidity here. Market makers know that. Or are we going to go up and sell up from above with go and test the bar 67 and then sell? So if we break that trend line, we'll go to the 50-15 and maybe even further high, but the decision hasn't been made. So if I wasn't playing safe, I'd be still in the trade, but it's a dangerous area. So the bulls are slowly, it's a small pullback bull trend here. It's trying to reach somewhere higher. Maybe we go reach here, and then with bar 40 midday we could sell. I don't know. I think until 1 o'clock, market could make its way further up, and then 1 o'clock we either break out bullish or bearish. Trend line is still holding. Bears trying to sell this already because it's a swing sell zone. You're gonna inside bar 37 at the highs. Okay, is there will always be some sellers underneath that, so they see this as a trading range highs, a good place to sell. And I kind of demonstrated why they could sell. One of the reasons why I wanted to play safe. Now, if they break it, that's good news, but they haven't broken this, so I don't want to buy something again that is still lingering underneath that trend line. But bulls are still trying to close a bull bar here. If the bar 38 closes bullish, we will definitely test 50-15 area above. But if they fail again here, it could be problematic. That bar needs to close bullish, close above the open of the day, go and test the close of yesterday, and then close above it. If it's struggling this much, because it's like a brick wall here, okay, so prices keep pushing, and it's trying to break it, hasn't broken anything. And if the bears finally give up after the third leg up, bulls after the third leg up, they give up, bears can take over. Kind of a ledge this is, but not in the sense of the ledge that we learn, identical tops or bottoms. That's not what I'm looking for. So it's like this, and the price goes sideways and suddenly drops. So that might be it, but we need a bear bar. It's also a triangle. Okay, so for bulls, this is a bull flag. So this could be a fake breakout, only to go right back and then break out to the upside. We don't know. So right now, you got a small triangle there, and we're getting a breakout. Breakouts are 50-50. If it breaks out, it might actually fail and reverse right back. So what you're seeing here is a small ledge and breakout to the downside. But let's see how this closes. If it closes really strong with almost no lower wick, that will sell, because this is the trend line. They're trying to break below that now. So I think this was not the right one. So that was the right one. So it's a good thing that I moved my stop and I'm out. If anyone's still holding, they will probably gonna wait for market to come down to this bad buy signal bar 32 and test it and then reverse. They might actually buy there and break even. Okay. So market could come here and then they will buy somewhere, probably either there or there, their midpoint around here, they will break even right there. But if we actually measure, so if they both the close, maybe both here, I'm just going to measure from here where they got stuck, and is where market could go. I'm going to take the body open of 32. It could come in here, and then they buy it, they break even, and then suddenly we could start to come down again. If the bulls keep the gap open here, okay, is right here, meaning we do not test the bar 32 high or the body open, and this bull gap stays open, suddenly bulls show up, then expect, look, we made a new low here, that means we're going to go way above and that. So we could do this, just pivot right there, keep the gap open. We're going to go and test these levels like this high and that high. Why is that? Well, it's basically what you're seeing here is a failed breakout. When market is taking out these structural lows, okay, notice how they're taken out poorly. Why? These are all wick breakouts and it reverses. Wick breakout and it reverses, right? Even here, wick. So you have 3. Yeah, it's nice, but the breakouts are not with the bear bodies. So now we go back up, they're swinging from here, but the problem here is that bears never were able to take out these structural lows with bear bodies. I don't know how far this is going to go. So right now, I'm assuming since there are trap bears here, they're trying to get back to the bar, okay, they might have sold underneath 31. So they want to break even there. So we just tested the bad buy signal bar. Well, only the upper portion of it. We didn't really test the body. So we're not overlapping, but job done, job well done by the bears. However, there's still a gap open here. Now, bears need to close this gap by overlapping exactly there. Okay, so they overlap. Now, where are the bulls? They will start to buy soon, and they're going to want to come up to here to possibly break even. You're buying against a really strong bear bar here, but there were buyers here. So those buyers going to defend this area, most likely. But it's difficult. Anybody who sees bar 39, they're hesitating. But bar stopped there. So it's processing something. It's processing buy orders, processing sell orders underneath 39. So it's, this is the problem with this part. Those buyers could be also down here, okay, at the open. Then eventually market needs to then come up here, and that is 1050. I don't know if we're going to get there, but this is now a swing from this level. Bears are swinging this. I'd say if I put my stop there, that could be the measured move target, or just trying to be conservative. I'm going to take the body, so that could be it. But there will always be buyers somewhere at the lower third of bar 33. Lower third of bar 33 approximately is the body of 32. So it's similar. So bulls still trying to get back to the 1050 area. Because if this is going to swing further down, they want to be able to exit before this actually goes against them. The problem here is that, look what happened, is we could actually come down here, go back up, fail to exit the bulls, and then we could start selling more, and then those bulls are going to wait for several legs down before they see a bull bar to buy above it to break even somewhere in the middle, and then get back up to here later on. So they might end up failing is if we get a point of no return bar like 39. So you have to always think about, if I'm entering here, do I have a chance to break even with average price? That I don't expect price to get back to the bar 36 close, but at least can I get some average area and then exit out? You're still loading a lot, okay, because you're going against this bar. So it's very dangerous. Sometimes I give up and I don't try to break even anyway, because there's a higher probability market can come down and then the buyers could be down here instead. I don't know. So bar 39 makes that very difficult for bulls. But some buy orders at the 33 low or the lower part of the 33, I'm still going to expect this area to be tested by bulls. If they fail, then we're going to say, well, they couldn't get there, even the average price. They're not going to be able to exit. So this was a point of no return. This is probably going to now measured move to the downside. Like this is, look at here, bad is buy signal bar. We came down and tested, immediately buyers showed up. At the open of 15 and the lower third of bull bar 16, look, if you actually measure from here to the open of 15, look what happened. They got their break even. And then it just went down with 2-bar measured move anyway. So the bears made money, bulls exit out, that's why you ended up getting this big bar, bear bar 24. Then the bulls started to buy because this is support. There was several legs up. So when it comes down, buyers are waiting there with 39 from yesterday, and then they start to make money. Eventually, they go 50%, so 80% probability of breaking even here. And then with the later buy, they're making money as it goes to the original buy. Maybe they entered above 17, but it never arrived 17. Okay? Just want you to show you. It happens over and over. So you have to, and same with the bulls. Look, is bad sell signal bar 8. It sells, and then somewhere here is buyers. I'm sorry. Yeah, it is a bad sell. Eventually, it goes back up, and bulls actually exit out, and then the bears sell again. So they're still trying. Maybe they bought underneath 29, not necessarily here. So I'm going to mark 29. Maybe underneath 33 that's still the 1050. It's possible they could get there, but they have to do a better job here. It's just so slow. So there's always a way to fix a trade, but you have to have enough contracts, okay, for you to, like, you can't just do one-to-one. It's kind of difficult. So you have to be willing to 2 times, 3 times. And that's why it gets very dangerous if you don't know what you're doing. Oh, yeah, the bond auction. Thank you. So we have 8 minutes to a bond auction. See, they couldn't get all that well. I don't think they're going to be able to reach there. And the bears know that. So they're trying to get down to that measured move target. This is where I don't try to fix anything when I see a gap bar like 39. You have a channel. I would take that. So you can see that bar actually did reach I removed it, but I just want to keep the chart clean. See, it reached the measured move right there. We might need to come down to the lower part of the channel. So if you have a midpoint, we are right at the midpoint. Bull's trying to close and get back up to here, but this could still swing further down. We have a head and shoulders pattern with a neckline. I think neckline is already broken. No, not yet. So here's the neckline. Bears need to break this neckline if they want to sell. So we could even come down further. So what I'm going to do now, I'm going to find better targets rather than using manually drawn trend lines. So I have, that's not it, but maybe something like this. That's the midpoint. If bears do show up here, we can end up coming down to this area. But first they need to sell, break. They need to break, then go up, and then sell. Or just trying to rejected there, rejected here, we're smack in the middle. If we get a bear bar, taking out this neckline, we're going to test right here, way below the 25. We might hit this line and that line before reversing back up again. Or we're just going to get a rejection right here, neckline, and the midpoint of the channel, and we're going to go right back up. Can we still get back up here? Well, yeah, because this is only 6 points and they couldn't really close below. If you measure from the high of this bar, 36, bears haven't really shown me anything that they want the 10-point target, which is 0350. Okay, 0350 is their 10-point, but they have to close a bear body below 0750. If they can close a bear body under this level, they're going to reach here very quickly. And in that process, they can actually break this neckline of this head and shoulders. Maybe this bond auction could be the catalyst for breaking this neckline right here. Let's see. All right, 10 seconds is to bond auction. Watch out. It could go other way too, because this neckline has not been broken. It's a midday. Could we get a midday reversal for bulls? It's possible that we could. We have a higher low. We even have left shoulder, right shoulder. I'm sorry, left shoulder head, right shoulder, small inverse head and shoulders, but it really is not a good setup. So I'm waiting for bears to sell this. But they might already have a second leg here. Leg 1 pullback is leg 2 with 42. Now a pullback, maybe we get a third leg down. Otherwise, we start closing bull bars. Market will want to get back to these highs and test it again. So how could this bear swing fail here? Can it fail? It might, because we're so bullish and we have huge bull gaps open. The market has on the daily chart a measured move that it could still try to go back up. But, whoa, okay, so here we go. See what just happened? Rejection right there. So now it's going higher. I would not trade this. Please be careful. It's testing the threshold area for the left shoulder. There could be still sellers, but this is if this bar closes really big bullish, then you do have a inverse head and shoulders, and so we didn't get that break. I really wanted this to break, and I wanted to see bears actually sell, but that's a midday reversal as well. Now we close a bull bar. We could even go right up there. So bulls are trying to close a bull bar, but failing. They need to close a bull bar. So they did get their test of 50-15. And one of the reasons why bears couldn't sell into this target, which was their 10-point, that's this 5,007.50. This was always the 10-point target, okay, for bulls. But if you actually measure, look where they closed the bar, 575. It's not 6-point. It needed to be 6-point, below 6 points. So actually, I was wrong. It needed to be right there, but you can also say it's one or the other, either that or one tick under. So if we had a close at 750, okay, one tick under 6-point, then we would have gotten down there. And that's where I said this could also reverse back up, because market wants to really test is, let's see, here, this area. Why? Because we made a low here. So go sideways, we go up, we come down, right? And then if we start to make bull structural breaks, there will be some selling, but here, buyers waiting to swing back up. So here. So we went sideways, went up, came down. Here is some structural, comes back, another one, but it's not enough. So we need, right here, we need a good bull close, okay? Then it comes down and it goes up, okay? And if then we test that high, we might even go higher. But we're stuck in a trading range right now. All I can do is just count 10 points up or down, and take profit. So they couldn't breach the threshold, and I kind of gave you that signal that bar 42 did not close a bear body, so it doesn't count. You don't have a trend to the downside. But if you're a pattern trader, we always have to recognize patterns. No break of the neckline. What is a neckline? You got a head and shoulders pattern, right? Is right there. This is a neckline. If it breaks it, it's probably going to bounce. But if it breaks it, you don't sell it right away. You look for a pullback, then you sell. You can take that as a measured move to the downside, or the entire measured move to the downside. You take profit here, you look for a bounce, and then you sell again, maybe add to your remainder of your contracts, and you take all your profit. Did we break that? No, we didn't. So you can't really sell. So now, bulls are trying to get probably another 3 points, see if they can actually make it. If they break about 50-16, is 50-16, they will go higher. It's like 19 area maybe. 50-19. Difficult day today. But for the channel traders, look what happened. We never had any bar closing below, no matter how you take your channel, okay, how you draw it. The midpoint held. We never closed below that. And you need kind of consecutive closes to be able to keep swinging towards these levels. We never got that. So what happened? Market just kept, reverse back up, goes to the channel high, breaks out, and claims the first breakout target. Probably wants the second one. So we might actually go up here, in here somewhere. So now you have a double bottom. higher low, or nested wedge and higher low. So the market is trying to become bullish, but this is also leg in a trading range, so that makes it even more difficult. So you got a leg in a trading range, big bar, needs to, so what do? Sorry, I've got another way of finding out. I'm going to get rid of this. The rest of it is you got a big breakout. How do you buy this? You certainly do not buy the close of that bar. You measure the body. That's how I do it. I'm looking for a pullback is into some levels. So I divide the bar into 3 sections, okay, is because it's a range that we are going to find buyers, if there are any. This is the first area they're waiting. That's the second dip, and the further down is dip buy right there. So the market could actually test here and then find buyers, one of them. So they bought here, that's one contract. They bought here, that's second contract, 66, 50% is, so they're making some money as it bounces, but it needs to bounce a lot more, and we need to get a bull bar in 48 seconds with the close of this bar. Now, what happens if they have, what happens if it comes down here? They have a buy order right here at the 33% as well. Some measure the whole thing, which is fine, but I don't like to do that. I like to see market come in here and maybe even dip and then reversing. But what happens is when it comes all the way down, that's a deep pullback, okay, it's within the range, and it closes a bear bar underneath 33%, I hesitate buying because that is such a deep pullback. I don't know, it could end up becoming a rejection of the entire bar 43, and I wait for a bull bar to buy instead of buying with limit order waiting automatically. But this is good enough so that anybody who bought at 66 and 50% already making money, and they're going to now look for a bull bar. If they don't see a bull bar, they're probably going to scalp out because it could still come down more. You do not want to see bear bar is closing below this level all the way down. If it does, that's a rejection, okay? No one's going to buy, and it could even come down more. But so far is those who bought the pullback at 66 and 50% making money, barely. So now they're looking for a bull close, and if the bull close finally exceeds the close of bar 43, which is where I start to measure, you're going to get a breakout, bull breakout. And that will be your first target. These are my targets and a measured move of this big ATR bar. So that's what I would be looking for. Especially in a trading range is like this, right? It's very difficult. You got a leg in a trading range, and these bars are kind of designed to trap the traders. This is a very wide trading range, okay? And a bar like this, machines will sell at the top of the trading range. And if they see that they're making money with a really, this isn't the best bear close, but it closed below its midpoint. And therefore, the second bear bar, it's trying to close bearish. If this bar closes bearish, you're going to get a lot more to the downside, because then bears are going to say, we made more than 2 points, okay? So ATR 36, I don't know what they did, but they probably sold that. They closed that. So that's a 2 point, say 225. So they made 325. That's 325 from where they sold, which is the close of the bar, bull bar, right? At the top of a trading range, the limit order market, bet against anything bullish, bet against anything bearish. So they did that so they know limit order machines, bear machines know that they're able to scalp 2 point, okay, easily. But what is it that they're looking for? They're looking for more. How would they know that they would get it? This bar now needs to close bearish to tell them they should stay in the trade, expect the lower third of this big bull bar range tested. If this bar closes bullish, those bears, if they're still stuck in the trade, that they haven't scalped anything, or they scalped, or they're holding a runner, they see this bar closes bullish, they're going to sell above it, okay? And they're going to exit out before market goes higher. Like this bear bar is, they sold it. Where's the second bear bar? Think of this as a trading range. 1, 2, 3, 4, 5 bar trading range from 75. They were making money, but a bar phenomenal as 79. Bet again, it was betting against this bar 78, which is a bull bar. But where's the follow through? They see this, what are they going to do? They're going to measure this bar, they're going to divide it into 3, they're going to sell somewhere in the upper level, and then it comes down, okay, and they're going to make money. They might even hold it, but there are buyers underneath that bar, okay, and the buyers do show up and push the bar 1 and close it higher. Now the bulls who bought this bar is 1 tick above, because it's kind of second entry, but who's going to buy the doji? Some did. So they're going to buy that close, and they're going to break even. More bears are selling, and no good bull closes, bears win. This fight, at least. So they kept the market down, but they had to scale in higher. So always think of do I see a trading range? Do I see a strong bull bar closing? What do I do? Are they selling that? Yes. Am I getting a second bar follow through? No. Oh my gosh, I'm trapped. What do I do? Oh, I should sell. Okay. Sell the upper third of that bar that you were trapped with. Then break even, exit out, or hold another runner, expect follow through. It happened here. It happened here. So here is another one. And same for the bears. Here's a trading range. Bar 2024 is designed to trap you, right? It's an acceleration into the low. And they're betting against and they're buying. So now you're looking for another bar. Ooh, you got another bar, actually. Is bar 2026. Okay, that's great. But why aren't we going higher? Well, because these guys are stuck, so they're going to sell, okay, somewhere up here. They're going to break even with 27, but you should not be exiting out of your long, because you have a confirmation second bull bar saying that betting against bears from the lows is working. All this is, bar 27, is to get the bears are stuck down here. You get a bull bar after 27, that's an amazing, phenomenal bear bar. Why are we getting a bull bar? That's because these bulls are still holding, and they're buying the pullback because this is still a limit order market. And now they make money, and now they make money. You see how this ended up going up and up and up? What do you mean by that? What bars are you starting to measure bear bars and bull bars right now? Bar 36 for bears, and current bar for bulls, bar 36. Oh, you mean the trap bars? I mean, that's not a bar that I'm looking for. That isn't the bar that I'm interested in. You want bars like this. Remember, trading ranges, when you have a vacuum down, okay, so you have a trading range, right? Suddenly, bears are selling and selling and selling. It vacuums down, right? You get these big bars. That's actually controlled, those bars are controlled by the bulls. Okay, so this bar is actually controlled by the bulls. It's designed to put there for you to believe that this is a breakout. It really is not. So then you get a bar like this, so you know that's called, what was the word I'm looking for? I forgot. Anyway, so basically it's known, it's in the course. Hold on, I'm going to tell you right now. I don't like to do perverse. Thank you. Perverse effects of so basically what seems like bearish, it's actually not. It's designed to keep you or enter into a sell and then trap you. Yeah, perverse logic. Yeah. So basically that's what you have, and so you look for like at the top of, it could be a tight trading range. but still you see a big bar like that, probably they're going to sell. And that's where the breakouts fail, or at the upper third, you always get a reversal, so on so. So we don't have 45 follow through, but that's the minimum that the bears can do. They opened and closed the body doji, but at the same place where 44 closed. So it's kind of a follow through, okay? And look where we are. Can the bulls show up here? Look where we're testing. This is no joke. This is no coincidence that we're testing that green line. If the bears close below that green line, they can sell. That's the lower third, okay? And we're holding. Bulls are trying to defend that area. Bears want to test the 43 low and get a breakout. Could be very dangerous. So, but if you are a bull and you bought here, 66%, you bought at the middle, you made some money, but all you could do was a scalp, right? And bull body never closed. Maybe it's time to exit and not buy anymore. Or if you're still holding, you probably have another order right at the 33%. Now that's filled. If you have not scalped anything with 45, now you're in with 3 contracts long. And this isn't giving you all kind of fuzzy feeling, is it? Right. So if they now close below the 33% and that green line, bears can take out these lows. Or you're not going to expect anybody coming in the market bullish all the way here, maybe a little bit here. So you may end up waiting before they show up. Okay. So what I generally do is I don't buy blindly at these levels. I wait for market to come down, close a bull bar, then I'll enter. So look, anybody who bought here, and who bought here. Now look, we're gonna test that. So anybody who bought here will make money. Anybody who bought here 66, that contract is not making any money. But look, what is it? That's 11.25. So we really didn't test 11.25. In order for anybody bought at the 50% and the 66%, and then the 33%. 33% contract is making money. It just needs to go and close a bull bar. Now everybody else starts making money, we could go higher. And if we actually start to close a bull bar above upper green line, then there will be more bulls entering the market. Limit order trading is hard. It really is hard. But if you actually see what some of the machines might be seeing, I've been testing this out for a long time. And I've been seeing why these levels are important, because you're trading within this range. You're stuck in this range. And when you see exactly they're following the same breadcrumbs that you're following, then you kind of know when you're going to fail and when you're going to be successful with that trade. So you can make a sound decision not to stay in a trade that might be going against you or going in the favor of the trade that you took. So right now anybody who bought with 33 made money. Anybody who bought with 50, even with bar 47, they actually made money, barely. Now, anybody who bought with 66 made money, but if nobody took profit there, then those machines are losing money. That's why market goes back and forth and back and forth and back and forth. Their machines constantly scalping. Some machines only scalp one tick. One tick. I can't trade like that. You cannot trade like that. There's no living like that. It's tiring. You can't do that. So, is market always in long? I'm going to clean this up. You can have this on your, let's see, always in short. Yeah, this is yesterday, so it doesn't count. Always in short with 3 and 4. Test and sell again. Then always in long. then always in short. So there's something happening here, and that something is a balance zone. So I'm going to find my balance zone. Okay, it's an area where market spends a lot of time, and you're going to make a some kind of a decision here that whether we go up and down. So amount of a breakout from this level, okay, cloned to the upside is amount of a breakout to the downside could now go and clone to the upside. So this is a trading range trading. Goes down, goes up, goes down. If we actually take out and close here, okay, we're going sideways, we can even go higher into that box. Can markets sell here? Yeah, if you start to see bear bars closing, then they can actually sell. But so far, it's a trading range trading since yesterday. An amount of the breakout to the downside, just put it above this area. See, I'm not so sure if I got the right place. Maybe this is the one. Just trying to find. Once the breakout fails, gets back in, breakout fail, gets back in. I think it's just too tight, but that's it. That's better. Okay, so another way, you have a big range bar here. We're stuck inside this range, right? As long as we do not close a bear bar underneath this green line, we're not going to come down and test here. Now, if the bulls start to close above the midpoint of this 43, they're going to want to go up and test here, okay, and then close a bull bar here. If they do that, then expect a breakout testing this and this right here. So wait for a bull close, and then they will buy. We're probably going to go there. They could accelerate and we could get this target, but we will come back down. If we find buyers with the pullback at the high of 43, we go to the next one. Only if we close bull bars around here, that green line. If bears start to close bear bars, then there's nothing. You're going to have to wait for a market to come all the way down here before bulls trapping the bears. This area has never been tested. It's fresh. First time it arrives, there will be buyers waiting to trap the bears. So bears are not going to get a clean breakout, most likely, especially bar 43 being such a bull bar. They're trying to keep this gap open so they can get a breakout. They might be already seeing this inverse head and shoulders, and so they want to break out from here. So that means they have to go and close a bull bar, buy again, close again, maybe come back, retest, first target, take profit, get above it, second target. Heck, we can even take out, and this would be my measured move of bar 43. But everything happens within a order. You just follow to see if you are getting that order. So right now, I'm looking at the midpoint of that bar 43, which is an important area. It's also cup, pullback, that's your handle. So the bulls are kind of showing me that they want to close right there. And if they do that, that's great. I love to see them go higher. No, I don't know. Area of interest is basically what Al Brooks says is balance zone, okay? Where market likes to go, bulls and the bears, they're agreed that it's a fair price that Brad Wolf talks about. So we have been, market has been showing us that this area is a fair price. It's market is comfortable there, okay? This is the best price they can give. That's why it keeps marking there. Eventually it gets a breakout, but it doesn't get a follow through. But eventually it will break out of there, okay? My area, that's a balance, so it's kind of an area of interest. But a place like this, you mark it if breakout happens, eventually market will come down there. It's going to try to bounce once, and the second one could be a good swing. But the swing doesn't work, and we start to break that, you're going to look to swing to the downside. So right now I am looking for bulls to extend this breakout and close a bull bar right up here. I want to see a bull bar closing right there. I see that, then I'm going to believe in the bulls. But I see a bar that closes right there but doesn't close one tick above. That could reverse back down again. So I'm looking for bulls to close a bull bar, maybe close another one, or open a one above 79%. That's going to be confirmation that bulls want to break above the 43 high. And another reason why is bears couldn't sell is because 45 was not a follow-through bear bar. So within the range, so if you actually measure to see where the limit order buyers, look, is they close that bear body above the 33%, and then a bull bar. So now everybody bought above that bull bar. So now everybody who bought the 33%, 50%, 66%, they're all making money. But it's not enough. They want a breakout. So they want this target to meet and then come to that target. So now if we get another bull bar, we finally exit out of this range, you're going to have potentially hitting this and that quickly. Now if you take the entire range, right? So that's OI, so you have an OII, bunch of inside bars, dojis, buyers underneath, right? So many ways to measure and find a place to enter. We now have a bull bar closed above the 50% of 43, but look what happened right there. So anybody who bought down here scalped right at that line. No bull bar closing. That's why you're getting this. There's still 3 minutes and a half. So this bar is young. This bar still can close above this level, right? But machines will scalp because you're in a limit order market. You cannot expect clean breakouts when you're stuck inside a bar with a range, okay? Twice as much of these inside bars. So you're always going to go. So I've been testing this, and these levels are very important. That if I see bull bars closing, I add to my long. If I bought lower, I'm going to first scalp there. I'm probably going to leave a runner. But if I see then the bars close above it, I add back what I scalped. Now I'm looking for a breakout. So, or you absolutely do nothing and get your confirmation there, and then you enter along. Or you get your confirmation here with the bear bars closing here, and then you sell, and you're looking for breakout levels as your target. This one, that one, and the measured move. You see, decision has not been made. We're going sideways. Everybody complains about it, but we complain about it, but the machines are making money. I mean, S&P is known for its sideways, limit order, overlapping bars, trading range trading, right? It's known for it. And could this be a distribution from the highs? Can the market sell? Look at what happened to the daily bar. It had a bear body. Now it's trying to close on its high or go high as possible. Can today actually close as a bull bar? Yeah. If it closes as a bull bar, we're going to continue. Friday, we could actually get to this area, all-time high, and then to here. So we have a trading range today. So it's not fun, but after this kind of move up, you have to expect the market cycle to give you this trading range, okay? So now I want to see bulls actually break above this, okay? And then invalidate this. They already invalidated this. They already have invalidated this with the neckline breaking failure, Okay, breakage failure. So now I know exactly where they're going. I don't need to tell you all of this. This is nonsense. Let's clean the chart up. We don't need to worry. Just focus on this, right? The left shoulder. Take that. And then really I'm more interested in this. I'm not even interested in any of this. That's a zone. You should always have a zone. But this is what I'm interested. I want market to close above it. Because once we close above it, we have a high probability of closing today with a bull bar. Not an inside bar, but possibly a bull bar. So bulls really need to break out. All right, so I'm looking for a bull bar here. I don't know if I'm going to get it. Now I'm going to put it back on. Is my mother bar technique. We still don't have a bull close above that green line. I need it. I needed to say that I can expect a breakout now. Test of the 50-75 or 50. Actually, it's 17, 50-17. So we can end up getting there. But we need the bull bar. You basically take a screenshot of these levels, and go to right here, Fibonacci retracement, and add these levels and save as a template and apply. That's all. Well, thank you, Ari Baba. But I don't know if they're going to break out. So that's a mystery because we're stuck in this trading range. But look at the bar 43. I mean, even though it's a leg in a trading range, we pull back to the 50% of that trading range, found buyers, trapped the bears again inside bar 47. Regardless of its upper wick, the size of its upper wick, almost the same size of the body, we'll start at the buy. That should give you confidence, not my voice, okay? That right there, if the bulls are buying a bar like 47, they're going to my target right now. Let's go. And I bought it, and I want the scalp. The first, you're in the sell zone, okay? And this sell zone never been tested. This is the first time we're testing. You're going to get a hiccup here from that 111 to 89. And the bears are always waiting above that outside bar. OII, they're always sellers. Just like the buy zone down here is never been tested, or the trap zone never been tested. This trap zone never been tested either. It's the first time we're testing. But if we close this bar now strongly bullish, look, we're going to test that 111. That is 50-16. If we close a bull bar above it, I think there's plenty of time, 1.5 minutes, we can accelerate right up to this shallow target. And I think we're going to get that target. We might even accelerate more. This is where market is trying to test this right here. We could test, we could do this. We could break out, go, and then everybody start to buy. Suddenly we get a bar with a huge wick and a bear body. That would be a bummer. But we have seen this happen last week, didn't we? So we'll see. It's trying. We're still in the sell zone. I mean the trap zone. This is where bears try to trap the bulls. They will try, especially it was never been tested before. From the 89% to 111 is always a trap zone. Always bears waiting. But if the orders, sell orders, those blocks of orders are not strong enough, those bulls can observe all of those orders, okay, and then break through that brick wall that I talked about. That's what they're doing. They're trying to weaken this area, which was weakened before one time. Look, 1 time, 2 times since the open, 3rd time, 4th time. This is it. They're going to break through this now. Watch. They're going to break through this brick wall, and they're going to get to my target, which is 50.17. Right now, we're getting the effect. We have no breakout from the mother bar side. So we're getting that result because that bar, there's no breakout here yet. This bar, 50, needed to close a bull bar, 1 tick above the high of 43 with a bull body. That is a breach, not a breakout. We don't have a body closed. So that's why you're getting this, okay? Plus, you're inside a trap zone. So it's doing its job. It's just that we haven't really broken this brick wall yet. So they're still trying. So if I bought here, I'm definitely taking profit there, okay? Even if I have a breakout, it doesn't matter. It's above 79%. We are still technically inside the range of 43. And the bears are trying to prevent, okay, a breakout. So this is a pullback, okay? They see a trading range and a bar that is designed to trap you at the high of a trading range. So the bear machines know that. You may not. So they're selling the close they're betting against. If they cannot close this bar, like bar 44, okay, is like bar is 79, we're going to get a breakout, bullish breakout. So you always have to think of, I'm buying this, but maybe it's time to pay myself because this may fail. Oh, look, it failed. It didn't even close a bull bar above the 43 high. So now I know bears are going to show up. Oh, look, bears just showed up. So what do I do now? Well, let's not panic. If I'm still holding a runner, okay, is maybe you minimize the risk there, took a bunch of contracts off the table because you don't know future, what this bar is going to do. You're still in with a 1 contract. You're hoping the market is going to go here and there, maybe higher. If you see this bar close extremely bearish, then you can say, this runner is a dud, and I don't have a confirmation of a breakout from this huge range. I should not be in this trade because this can now come back down all the way to the 50%, especially if the bears close a bear bar is underneath this level. So you got to make decisions because you are in a trading range environment. Everything's going to go against you. What seems like a great trade is going to eventually die or abruptly die. That's because you're not reading what the machines are reading. Okay? But this is already explained to you in the course. It's the bonus videos, but it's not just a bonus. Bonus videos are bonus because in the course we have a whole, the videos dedicated how to trade the IOI, inside bars, II, OO, OII, OIO. So all of these are already part of the videos series. It's just that there are 2 more added last year around Christmas, I think, or New Year's, that you should go watch. Basically, I took that concept and through some levels just to see, okay, is OII, IOI, these are great concepts, but I still need to know how much it's going to pull and where it's going to fail. 33% buyers showed up. 33% lower third level of this bar, buyers showed up. We haven't even tested the trap zone. Buyers showed up, 2 bars. That's great. If I buy this, how far is this going to go? Well, maybe it's going to go test this high, but I need a threshold, and that's your threshold. Nothing closed above it, but nothing closed bearish below it, hence bar 49. I'm going to stay in my long. Ooh, look, I finally am testing the high. Now we didn't close a bull bar above the high of 43. Maybe I need to take some money off the table while I can. I took that money. Yay. Ooh, bear bar. I'm glad I did that because now I need to look to see if the bears are going to be able to close below this level to drive it down so you don't have to be stuck in a bear trade, okay, a short trade while you're still holding. You can give back everything. But these levels will help you. But the L is telling you, you see a level like this, OII, it's a triangle, it's eventually going to break out. First breakout, hence bar 50, is a false breakout. Now it comes down. Why? Because triangles are 50-50. So breakouts will fail quickly. It comes back inside the triangle apex, and it can actually go and test this part. Why would it test that part? Well, that's the lower part of the triangle. There's a trend line that they want to break. Okay? So until you get a clear breakout from either this end or that end of bar 43, you can also sit on your hands and do nothing. Today is very difficult, so I mean, but you can make it easy. Like for example, let me find another bar since the, here, let me delete everything. Since the open, I'm not looking at any of this. Since the open, all right, market opened. Oh, look right there. Bar 3 is same concept. Apply. That's already telling you, hey, you are in a limit order market. So try to pay attention to what you are in. I am measuring bar 3, extreme to extreme. Look, we just tested from here to here is a trap zone. Look how many times we've tested. I always look for 2 tests. Here's the midpoint. Here's the midpoint of this bar. This is the range I'm in. Just here. I'm gonna make that a different color. 5 this is the range I'm in. This is the trap zone, okay, for bears. This is the trap zone for bulls, right there, okay? And meaning bulls get trapped here, bears get trapped here. How I trade this, I lace this area with buy orders if this area never been tested, even all the way down here. I get filled with maybe but that's it. I only get filled with 1 contract. So I put an order there, I put an order here, and I put an order here. I got filled with 1. I cancel these out. These are done. They never been processed, but I'm in. So where am I gonna take this? First here, if I see a bull bar closing above the 50%, I'm gonna hold it. I'm trading inside the range, which is very dangerous, difficult. But you can make a lot of money if you enter from the trap zones. If they've never been tested before, it's gonna get tested twice, so you can buy twice. Okay, we go there. Look, upper trap zone, never been tested. But we have a sign saying that we're gonna go and test there. It might be here, it might be there, right? I can hold this. Look where this bar closed. Look where this bar ended. It tested the, sorry, that's not it. That's open of the day. Let me get rid of that. It's confusing. Look, we haven't tested that, so we still have a room. This one breached above it. I have to take profit here, because even if it breaches, as long as it doesn't close a bull bar above the high of this bar 3, most likely this is going to come down. So take your profit. And what you can do, you can also sell. If you do not see a bull bar taking out this high with a bull body, you don't need to buy and expect these target lines to be tested. You now see a bear bar, or you can wait. If we see a bar closing below, like this is already selling, and you haven't really sold anything here, just sell this bar. Maybe take profit there. They close the bar right there. This one reversed. Why? Because many bulls who were still holding, dumbfounded with this bar, they're buying either at the 50% or 33%, and they're breaking even. After they break even, this is the second time we're testing the trap zone, still no bull bar, you sell. Now where are we going to test? We're going to test somewhere in here. But this is the second time. Why is this going up? Well, everybody's like confused. I see it. I'm looking at this. I know exactly what it's doing. It's like, this is going to bounce. Why? This is the second time we're testing the trap zone. It bounces. Look, it just bounced. So if you really want to trade this, find a bar like this, okay, until it meets one of the breakout bars, breakout levels. If you see another like outside bar like 9, okay, or 7, you're not going to use them. You're going to use this one. When we get a breakout target meet, then you're done. So you're going to be now in the hunt or on the hunt, whatever you call it, of another bar. So maybe take this one, that one right there. But this one also met its target, right? So that's not the one anymore. So look, but you can use that. So, or the bigger one, maybe this one. Doesn't matter, but this one already met the target. Even if you use that one, that's an outside bar, followed by an inside bar, 11, 12. That one also met the target. And this time, bulls are probably, look, bulls take the market up there, and it fails. But what if you use this one? Where was that? This one. What if you use this one? Look, bears met the target, bulls met the target. So I'm on the hunt for a new one. Where is that? Not that one, not that one. This one. Bar 19. Oh my gosh, like today was a galore, mother bar galore. So you measure that. Bar 19 we have, oh look, we got a breakout right off the gate. You got a breakout signal. So now you can either sell one tick under, or I don't like to sell like that. I like to sell the pullback. Maybe here, maybe here. I'm going to put a bunch of orders. It goes up, tests all of that, fills me in, comes back down, and closes here. Now, some bulls try to buy it because it's still a trap zone, but we already have a breakout. I'm not expecting a reversal. I'm expecting now this target, and then measured move. Look, it came down to the measured move, but it cannot close a bear bar to continue, and it closed the bull bar. What are you going to do? You're done. You're in the hunt. Is there a new outside bar here that I can use? I don't have one. I don't have one. None, none, none. Nothing, nothing. I'm trying to see if I miss anything. Nothing. There's one right there. I'm going to take same thing. Outside, inside, combo. Breakout, sell. Targets, 1, 2. That's actually 1. Where is that? Sorry. That's 1, that's 2, and that's 3. Nothing closing below the measured move 100%. You cannot expect it to go here. You can even buy early and put your stop underneath this bar and then expect market to get back to here. But this one also, now your new one, now you can use that, right? I'm going to get rid of that. So you got it. False breakout. Look, whew, breakout targets. Reach, that was a news bar. Reach, 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 reach. That's 2 to 1 of mother bar. 2 to 1. So there's always a way to trade. I like to create rule-based trading with what I see in Brooks trading course. I mean, even with the wedges, I have a rule-based trading. Like, for example, look at bar 25. You think I would have bought that bar 25? No. I would never have put a buy order above the bar 25. Absolutely. Why? Because I know its midpoint will be tested first. Even if you buy it, you don't have too much space to go up. If you do, you're going to get trapped. So what I do is I take the last bar of the third leg, mark that area, and I measure it, okay? And I find my midpoint. I mark the midpoint. I do not buy. I wait for a pullback. I put a limit order there. and I buy that bounce, I make money. But I know it's going to come back probably for the second time. There's a trading range here, small. It comes back, but nothing is going below that 5,007, okay? So bull bar, now I can buy that bull bar. I'm definitely buying this one. So I buy it, and I probably need to take profit there because the trading range high, strong bear sell-off with consecutive bars. So I know sellers are waiting there. I'm just going to take profit. It's also the third leg. And then we come back again. Look, is how many times? This is the second time they try to break the 50%. Could they? No. Now what do? Well, I can buy maybe one tick above with a very small risk underneath 25. If I do that, what is my initial risk reward? That's my 1-to-1, which we got. And that's my 2-to-1, which we got, and then started to come down. See that? Now, same thing for bears. If you see it is triple top, right? So let's see, 1, 2, 3. So now this is the last bar that made a high, and if this is the wedge, obviously, okay. So now you measure that range, find a midpoint. Well, I'm looking to sell at wedge top. So what am I looking for? Am I going to sell the close of 51? No. I want to see market test this line first and show me that the bulls cannot close above it to turn this a wedge failure to break out and get a measured move to the upside. Oh, look, they're testing and it's not able to close a bar. Okay, maybe I can sell with a limit order. Do I see stop order bears making money? Well, they might have sold underneath. I don't know. Nobody's making any money here. It's still limit order. As far as I'm concerned, this can still go right back up, but I don't know. If this bar closes bearish, you stay in your short. You might even put a sell order underneath 53 and wait to get filled. Especially if this bar closes bearish, then you take that order from underneath 53, stick it under 54, then you sell even more. But generally, I enter with limit orders. I always wait for this level to be tested before I sell anything. Like here, you have a small wedge pattern here. Up on this, down on this, up, down, up, down. So there's a wedge here. So if you did the exact same thing here, right, divide it, approximately midpoint, nothing closing, and you get a big bar, okay? If you buy this, right, so where's your initial stop? I'm going to put it there. Did I already measure? I think I already measured this. I'm sorry, I might be doing the same thing here. Yeah, I did. I can see it so clearly. I keep doing the same thing. See? And even the pullback, they bought it. But at this point, that's basically, that's high 1, that's high 2, or I'm just trying to think. That's high 1, that's high 2. So we're in the high 2 buy. I just counted better. It's clearer here on the higher time frame. Market is trying to break above this level to go higher. So in order for, if this wedge is not done, and suddenly you get a bull bar closing above 1425, okay, what are you going to do? Make 1450? I can't seem to fix that. So I think that is what happens. If bulls start to close above it, that means this wedge is not the wedge. We might actually get another high. Okay, so you have to exit out of your short. And you kind of get the idea. Limit order bears made money. But how come, where are the stop order bears? When the limit order bears and the stop order bears are in the market making money together, you have a swing trade. Right now, only the limit order bears are making money. Stop order bears are not making money. So you're still stuck in a limit order market in some kind of a trading range. And this may not be the wedge top. In fact, we might need to actually break out and get up there. See what's going on there? Everything in theory is good, we learn quick. But when you start to apply the tactics, that's where it all gets, oh my gosh, I don't know what I'm doing. Well, count the wedge tops and bottoms and see failures. Who's making money? Is it just a limit order? Then I'm in some kind of a trading range. This isn't a breakout market. I cannot sell below bars, okay? Especially a bull bar, you should not be selling anyway. So maybe I need to either enter with a limit order or go against the bears rather than selling what seems like a wedge top. Maybe I need to not sell it and buy against it and make money. So what does that mean? Maybe I can bet against these big bear closes and make money, but I still have to scalp, not swing. Okay? Now what happens if the bulls actually close above 1450? If they do that, then this wasn't your wedge top. Chances are we might end up going there. And in fact, we get a wedge failure. That means we get some kind of a measured move to the upside, only if we take out the bar 50 high. Now there's also let's clean this up. Let's go back to, we're still stuck actually we're no longer stuck, I think, but I want to make sure. In that bar 50. So what does this mean? Well, this means we already met the target twice, in fact. Tested with 51 and then tested with 53. So there's a much better one. So you should be using this one. This one already got a breakout, but it's a breakout, impulsive breakout, not confirmed breakout. And that's why it's a shallow target. Machines will scalp there, but if this body closes above bar 53 high, then we're probably going to get to the actual target. This is a target, but it's so shallow and close to the breakout point, which is the 53 high. It generally is like it's like a threshold. I know that there's a bull breakout if bulls actually close a bull bar above it. Then this is your first target, and that's your second target. Anything more than that is swing. Bulls are still trying to break this wall and not doing all that well. So now, why is this bar trying to close like this? Well, remember that midpoint of this last bar that made a high and that wedge top? That could be still holding, and the bears are still trying to swing this down. Come down and test the 46 low, maybe even 42 low. But they have to close a really good bear bar here and open another one and take out the 53 low. So you don't know if the bears are going to be able to swing here. But they're trying. So here's a first entry. They're trying to get a second entry. But we don't know. So 40 seconds, we'll know if this bar closes really strongly bearish on its low with almost no lower wick. Many bears will sell it. And they want to test the 53 low, and they want to get a breakout from the 53 low. So they can quickly get down to the threshold targets and then first targets, which happens to be the wedge breakout to the downside target anyway. So I think this is the confluence, and the market might be coming down to here. So we'll know in 5 seconds when this bar closes. Okay, it's kind of lower wick. I don't like it, but the bears actually closed below the 50% of 53. So the bears now want to take out the 53 low. So they will try their best, but it's the first time they're testing the trap zone. There are buy orders waiting. Why do you think the bar 56 bounced like that? It hit a wall of buy orders trying to prevent bears from breaching this trap. So bears are trying to breach, observe all these orders, take out the 53 low. We just tested 53 low, but that's still a trap zone. Now more buy orders inside the trap zone from 11 to minus 11. What happens to those orders? If you're selling, you're going to be trapped. You're going to be stopped. So you have a scalp there, not a swing. When does the swing bears begin? When they take out the 53 with a bear close. So bears will try to sell either somewhere here at the 50% or higher to get back down here. When will they not sell? Who's going to tell me? When will the bears not going to sell? What has to happen that the bears will not sell? They're selling now. Who's going to tell me? What area or price level that they see something happening, that they will not sell? They're going to let go bulls to take it all the way up here. Yes, close above 79%. Exactly. So now it's everyone who sold in a trading range with a stop order from 55%. They know they're in with a limit order. They're looking to see, can we make money now with stop orders to start the swing and get these targets? If this bar now closes bearish, then limit order bears entered, stop order bears already entered. They just need the confirmation that this is indeed a bear swing. So this bar now has to close bearish. If it fails, another failure for bears, and they're going to exit. And then the market will quickly get to the 79. It will close above 79, a bull bar. Then they're going to try to breach, probably going to close a bull bar here. They're going to get to here, and then the measured move target. So what are the machines doing? Well, they know, they're not stupid. And they're like, listen, this is the first time it's going to be tested, but nobody knows. We do. So they put a buy order, bunch of buy orders, like 3. One here, and maybe one there. 2 of those got activated. It quickly went up there. Look how much money they have made. I can trade this all day long, but it's hard to explain when I'm talking, because I have to they came in here, they want 1 tick above. That was actually more than 2 points because they entered also here. Oh, look, that was a solid 2 point. Why is solid? That's 225. So in order to make 2 points, it has to go 1 or 2 ticks above. Look, 225. That's a good scalp, right, for limit order bulls. But if that's all they're getting, and we get a bear bar, oh, swing, baby, swing, they're going to come down here. We're probably going to test it and bounce, okay? And then there could be sellers there, and we could come all the way down, maybe even here. Oh, suki. We just got the threshold. Now let's go get the 6180. Come on, bears. We have to test this low anyway, right? First leg pullback, second leg pullback, third leg? No. First leg pullback, second leg pullback, third leg. Third leg starting point is always a target anyway. That's why I said this is a great confluence here. Most likely, we're going to test that. Let's see. There's scalping here. That's why this body is moving up. Why? Because this is a target anyway. It's the first breakout target testing low of 53. Bears are showing, hey, we're breaking below that. We're going to take some money here because we don't know if there are any buyers here. So we're going to pay ourselves here. Many machines will do that. But the moment this bar closes down here or 1 tick underneath 53 with a body, they will try to sell even more and get the second target. If you're smart, and I'm pretty sure you are, you don't have to do all of this. You can simply put a buy order there, buy order here, buy order here. When a market comes in here about to take profit, you take profit with them. Basically, you buy into the profit taken. And then you do it again, and then you do it again. But you just have to remember your profit taken limited to 2 points or so. So it's a two-sided trading, right? The market. Someone's selling, someone's buying. So if you know where they're going to buy back their shorts, hence these levels, you can actually put a buy order and test it out and see if you can make a solid 1 point, 2 point, 3 point. So there's that. You just have to test it and see what your comfort level, how you want to trade this, right? So we have a breakout confirmation, which is bar 56, okay? But remember, these zones try to trap twice. Bulls were buying here, they were long trap. What do you think they're going to do? They're going to buy in the trap zone, or hence the profit area. If they're stuck here, they bought here. Where is their average? 80% of the time, it's going to go halfway up. It did. So if those bulls exit out, we can still sell. But if they don't exit out and we end up closing a bull bar right there, if you're still short and you didn't exit, you're going to be losing the money that you just made. But you can then know what's happening. But what's going to happen, those who did not exit and still holding a runner into here and here, is they see this bar. And suddenly a bull bar closes around here, right? Maybe one tick above is right there. What do you think they're going to do? Well, they're going to sell. This was the first time the trap zone tested. As market goes there, they're going to sell. As it comes down a little bit, they will exit out before it goes up. But until that happens, there's no breakout. So we still don't know. And plus, in order to bull breakout to happen, what do we need right now? What do we need to see with bar 57? What does the 57 need to do? Not just 79, bar 50%. We need a bull bar closing above 50%. Some of those bears will sell at the 50%, try to prevent bulls from breaching above. 79 is later. That's absolute bullishness it gives you. So they're selling is right now, right here, because they want to close this bar bearish enough to bring it down here. So because we have a confirmation of bears, but it's been nothing but a alternating bars trying to get a breakout, but rotation is to the downside. Bulls see a bull flag, wedge bull flag. And that's one of the reasons they might have both there. But at this point, you're using this technique, you're not looking at patterns. So we're in a scalping mode, not a swing trade at the moment. The question about, I'm not understanding the question, but I'm going to read it. Are you not reluctant to think about buying closes? Hold on. Brad posted something. I'm going to read this. There's a good question here. I'm just not understanding. Are you not reluctant to think about buying closes above certain levels on a day where the highs are sold and lows are both? Yeah, that's trading range trading. That's the trading range behavior, right? A day like this, oh yeah, but what we're talking about micro level. We're talking about micro level ranges, okay? We already talked about that. We have been seeing a head and shoulders pattern, okay, and it first actually failed to break a neckline, and bulls are still trying to get back up to this level. And they're still trying, but they're failing. We have a trading range here. We already know that. It's been, I opened where's that? Hold on. The first thing I did when I came on, online, I went to the encyclopedia and opened and go through a bunch of charts within the trading range trading, okay, part. So we already know that this is buy low, sell high, is do nothing in the middle. But that's great. If you bought here, you held it, you have a big account, you didn't take anything, suddenly this happened, you can take a big loss of 7.5 points, and then you get a huge slap, okay? If you were still selling, now you have an 8-9 point going against you. Not everybody trades like that. So people who bought here with this bar, they probably held it and took profit there. People maybe sold here, okay, which is fine. Remember I said earlier, I would not buy this bar. I said this bar is designed to trap you, so please don't buy this bar. If you haven't done anything, if you didn't buy down here, I even said you should have bought right here. Now wait for the pullback and then buy, right? So I gave directions that you could buy around here, and I even showed exactly where the limit buyers were, right? The pullback buyers were the 33, 50, and 66% of this big 43 bar 43's body. So we traded that as well. So now we're trading something else because the conditions are so bad. But how would you know how to sell this? We just sell the close of 51. You're in a trading range environment. Maybe it's a 2 bar, maybe it's a 3 bar. If you sell the 51, they're buying the close of 51. Look at 52. Then they're selling the pullback, the 66% of 51, they're selling. So, or the half, 50% of 51. They're selling somewhere there, upper third. So how do you trade this? That's what I'm explaining. But if you are, hey, I'm going to sell the high, how do you know? This morning, I was telling everyone this breakout could fail because around 10 o'clock, we're always looking for a double top. There's already a trading range here. If you take this as your trading range, you're at the high. So instead of buying, sell the high and then test of the lows, maybe a projection to downside. Yeah, sure, that can be done. I already did that this morning on Discord. But look at this price action. How would you trade this price action, right? If you came on, board with the bar 1, you got a clean slate. You have no trades open. You haven't been selling all the way up here. How do you take a trade, right? So you just keep finding a trading range. Maybe you take the extreme. I even did that. You divide it into 3 places. Then we will be doing exactly what you just said, which we did. Sell from the highs, because at this point, you're not seeing any of this price action. You're seeing this, right? So what are you going to do? Let me clean this up. You're going to sell in here. You're going to scalp here, or you're going to leave some to go downside. We're just tested here. Buyers showed up, but they can't go to the upper boundary and close a bull bar, and they close another bar, 23. Now they're selling. What else? We're still in some kind of a trading range, but now it's a bigger trading range. So I'm going to take that as my low. That's my high. They're buying. If you bought this, what are you going to do? Smack in the middle, you're going to take profit. Bar 27, test it. You should be taking profit there. Because you have consecutive bear bars, this could come down and test right down here. You have a wedge, 3, 15, 25. The last bar in the third push is bar 25. Chances are we're going to go test the 50% of that bar 25. We test it. We never close below it, but we close the bull bar. You can buy. Why would I buy 28? Well, it's the lower third of the trading range I'm in, and it's combined with the wedge bottom setup reversal. I have a bull close above the 50%. I can take a chance buying this, putting my stop here, and here's my actual target, 1-to-1. That's 1-to-1. I'm going to look for 2-to-1 because I'm still long. My stop is down here. That's my 2-to-1. Am I going to get it? I don't know. Oh, I did get it. I mean, it was touch and go, but I did get it. No, wait, I didn't. I didn't. No, I did now. Look, right there. So, but what would make me buy again here? Well, first of all, this came down so fast, okay? I have to fix it. Well, where do I buy it? It's the 50% of this bar right here. 50% is right there. We come down to the 50% of the last bar of the wedge bottom. I'm disappointed. I was on my way to 2-to-1. They probably got 1.5 because you're in a trading range environment. So you're not going to get clean 2-to-1s. Oh yeah, they did. So this was a 1.5 extension of 1-to-1 targets from here. Okay, that's great. Now it's turning. I'm still in 2-to-1 target. What am I going to do? Well, I can't buy these bear bars. I'm going to have to wait for market to come down here where the buyers showed up strong. Evidence says if there are 2 legs up, chances are there are more buyers over there, orders there, I can buy it. And you buy it and you're stuck here, you make a break even and then some, and the market gives you a clean, oh no, wait, that didn't work. Did it? Yes. That's a clean, beautifully actually, went above the 2-to-1. And that's where you take your profit. And now your trading range, you extend the same trading range, and we're going with what you just said, Stefano. And you have an opportunity to sell at the top of the trading range, right? So there you have it. So we do all that. But that's how I make it work. And hopefully this makes sense, right? So how do you make this work? I made it work for the bears. Now I have a wedge. 1, 2, 3. What's the last bar? This bar. What do? I'm going to find a 50% of bar 50. I need to make this work. I want to sell this. But I'm not going to sell underneath 51. It's got a huge wick. I'm definitely not selling the 51 close. Why would I not sell the 51 close? Well, I'm not going to go far away. This line has to be tested once or twice. That's one. It's because I'm in a limit order market. Bar 50 and 51 tells me that I am. Both bars are overlapping 100%. Okay, maybe 99%. This one didn't really go and test that, but bodies are overlapping 100%. So I'm definitely not in the business of selling the close of this. If I do, I'm going to be forced to sell higher. Limit order sellers, limit orders. Oh, this is nice. First entry sell and second entry sell. No, I can sell underneath. But where's this going? I don't have too much space. I am selling here, which is great. I sold with a limit order, is maybe there, here. Where am I going to take profit? Smack in the middle of 50% of this trading range. That gives me 3.5. So take out 1 for entry, limit order, 1 for exit, limit order. So you make a clean 3-point scalp there. But market is already telling you you're not in a swing, you're in a scalp mode. These bars are overlapping. So take what you can, don't expect a lot. Look what we just did. I mean, I just put that haphazardly, that 50-14. Yeah, I did. So this was really is the 50%. Yeah, right there. So that was we go back again. I mean, this is so frustrating, isn't it? But if you held your short, and your stop is up here, is fine, maybe even above 55, you're still in a swing. You're holding it all the way down to here. You want market to come all the way down here, and you're going to scalp there. Or you're going to hold it somewhere in between here and here. It might even come down here. I don't know. It's a trading range. I'm in a scalp mode. I'm not swinging anything because market is proving to me that I don't have too much. So if I'm in a scalping mode, and that's why is finding these outside-inside combos and utilizing the range breakouts to scalp is, I think, a lot more safe, in my opinion. But do what is right. So let's see. So this is the one. Actually, I might be wrong there. Sorry. Let's see. Actually, I think we're still inside of this, to be honest with you. We're still inside of this range because it's the biggest bar. So there's no point of taking any of the small bars. You want bigger targets. You want bigger reward, right? So use the biggest outside bar. And in fact, this outside, inside, OII is qualified any of these OI setups. And plus, we never met any of the targets breakouts. So we're still stuck in this. So market is already telling you, you're not going too far. Here's your first test of the trap zone. Here's your second test of the trap zone. And the lower level never been tested. So chances are, if we get another bear bar, consecutive bear bar underneath the 50%, bar 43. Chances are market is trying to come down to here. So I don't know if I made it any worse. Have I confused you? I mean, I don't know. I hope I didn't. Next question. Oh yeah, there are back-to-back questions here. Are bears seeing wedge 36, 43, 50, head and shoulders pattern 43, 50, 55? Okay. 36, 43, 50. 36, 43, 50. Yes. So there was that wedge we talked about. So I answered that question. Head and shoulders is, yeah, left shoulder is head, right shoulder. Sure. Then where's your neckline? So let's ask Stefano. I like his name. Stefano. Are you Italian, Stefano? He must be. So anyway, and this is, here I am incriminating everybody. Anywho, don't answer the question. Where is my neckline if this is my head and shoulders? Bar 46. Well, it's actually a bunch of bars, right? So, but good job. So we already broke it, right? We already broke it. We went back, retest, and we're trying to sell it. So it is possible that the market is trying to come down to here. Is this? Maybe we haven't even broken anything, and that this is actually a bull flag, and this head and shoulders will be violated in a minute. So you got wedge bottom, 1, 2, 3, 1, 2, 3, right? Bulls got 1, 2. Bulls don't have the third leg yet. What if the bulls now start to make a third leg in this trading range? I don't know. I think this is the neckline, but you said 46, so you are accurate. But if you have taken it this way, right? So we actually did break it, and we're now retesting. So then add this, because some computers will draw different lines, trend lines. And so here is if you want confirmation, now you need bears to actually break this in order to come down to here. What if they don't? What if they reverse and close above this line? Then we're going right back up to here, bar 43 high, and then maybe even 50 high. So, but they need to break above this line and close a bull bar. So far, it is head and shoulders. That this bar doesn't make it any easy for anyone, any bulls. I'm sorry, this bar 43 doesn't make it any easy for bears, not bulls. So you can also do this. You don't have to use any of this, but let's see. Divide it into 3 sections. OII, and buyers showed up. We test the highs, but bears waiting there because those are the trading range highs. So now you're in a smaller trading range. Sellers here. If you sell, scalp and hold a runner into this area, but you have to take profit here. Buyers probably waiting. Okay, so buyers are waiting in this area. You can do that too. Now, how do you look for a bull breakout? Well, the first test of the high of this bar, you're always going to get some bears. Second time. So generally, if this is 66% and this is 33%, I look for consecutive bull closes above this level. I don't have consecutive. I don't know what this is. That's a doji. Doesn't count. Okay. But if this bar if 49 was actually closed like 50, okay, then we would have already gotten a breakout targets tested. It didn't happen. So this isn't consecutive. I need 2 consecutive bull bars. Then you can be sure to buy it. You're going to hit your targets. Now for bears, what do you need? What is the confirmation for early breakout? You need consecutive bear bars. Okay, they're going to try to buy, especially if it's never been tested, this area. So it's most likely they're going to try to trap the bears, trying to sell and break the 43 low. It's going to go bounce. And then they're going to try to sell again. If they actually finally sell, that 2 bars is your confirmation that this was a pullback and sell and break out to the downside. So the reason why you're getting this nonsense, because we don't have a confirmation for bulls above this line, and we don't have a confirmation for bears below that line. So we're stuck. So it's actually this trading range is the heart of this trading range. Within the bigger daily range is the balance zone, where I think Brad would call it fair price, right? So because it keeps going there and staying there until it makes a decision. So sometimes it's better to sit on your hands and do nothing until you get there. Like, let's do an exercise quickly. Where was the last big bar? This bar 11 that's a outside inside combo, right? Take that. So where is the confirmation? Where's the confirmation for bears? Look at bar 14 and look at bar 15. What just happened there? It's actually a great exercise right here. Bears closed the first bar and a second bar, right? But look what happened. They actually hit some of the targets. If you actually apply, I'll add it right here. Someone asked me how to do this, right? So I'll add, what do I need? Hello, 17? Yeah, I'll add that one. You can do 66, doesn't matter. You can do 66. If you don't like Fibonacci levels, use 66. That's L's number. Projected as a breakout. And then I'll do. So that's dash. Okay. Apply. Okay, something's amiss there. Sorry. What is that? I just made a mistake there. Oh. Okay, here we go. Here we go. Look, it met the target, but this is not a breakout, so this is done. This was bad price action. But if you saw confirmation, the problem here, there was no confirmation. This is your first bar, close below. You need a second bar. What happens if this open quickly came down, you will not be able to trade this, and then goes and closes up there. But what if you sold it? Problem here, it already tested, and this bar is not sellable. It's not going to sell. So now it's going up. I'm looking for 2 bull bars. I have confirmation is 17 and 18. Now what? Well, it's the first time we're testing outside. That's the inside, outside, inside. This is the outside. We're testing the trap zone. Is most likely sellers waiting. It's a fresh zone. But I do have this. That's great. How can I buy it? If you put a buy stop order, did you get filled? No. You didn't get filled. If you put a sell stop order, did you get filled to get this target and a further more? No, you didn't. So you're safe. So use the stop orders, okay, for breakouts. Then I get this one, right? So what do I need? I need consecutive closes below right here. I got 1. I got 2. It's a doji. I don't like dojis. They mean nothing. So it's not really consecutive. But they sold it. If you put a sell order underneath, they sold it. They get anything? No. Because this is not a consecutive second bear close, but it is a close. So now anybody who's disappointed, what do you think they're going to do? They're going to sell either here or at the 50% pullback, and they're going to get their targets. And here, they couldn't get this one, but it's so close. But they not only fixed, it eventually came down because you have some kind of a confirmation there. But no breakout. The reason why it bounced, no breakout. If bar 22 were to break this line, bar 11 lows, with a bear body, okay, bar 22, we would not have gotten this pullback. It would have been a bear body here. It would have been a pullback maybe here or there, but then it would come down and it would claim this. Possibly it would have claimed that target as well. So you have to kind of see these levels and decide. So anything else there is this bar. Inside, outside, inside. 77, 78 and 79. What do I need? I need 2 bull bars. I got nothing. I need 2 bear bars or 2 closes. This didn't close below, so this doesn't count. Oh, I got a close and it kind of breached. Oh, I got another close. That's great. Now I have also a breakout with the bar 4 from the low of 78. Oh, let me put a sell order here. Ooh. Now we took out that high. And what am I going to do? Well, you can do 2 things. How do you sell this? You can trail your stop order, stop order, stop order. You get filled and you make money. Or you don't do that. You just cancel out the order. Is underneath bar 4. Now you're looking to buy. You want to buy. How do you buy? And expect a breakout. Where are my consecutive bull closes? Above this, nothing. I can't, right? But if you actually trail the sell stop, now you know that market is already signaling you. We're not allowing bulls to enter and get confirmation and breakout from the range of 78 from yesterday. So if you're trailing your sell stop, we're about to fill you and we're going to give you some money. Look, they got that target. Oh, it came close, but who cares? I mean, at that point, you have a runner. And it closes like that, you exit. So, but it's really difficult, let me tell you. So, but there's always a way to enter. I'm just trying to see what else is there. Like there's this one, I deleted it. I should have not deleted it. There's this one, right? So let's use that. I need that's the 66. I have one confirmation, and I have a second confirmation. It's already a breakout, okay? So if I buy 1 tick above, oh no, I got trapped, right? There's already a confirmation, but look what's happening there. If you buy 1 tick above, already a breakout bar. Let me get this out of the way. It's already reached the target, and it's already scalping the target. And you're buying into something that it may not go higher. So anybody who bought here, okay, that was the first confirmation. That was the second. You bought it there, and this happened. So what are you going to do? You're going to buy again, okay, and it goes up, you can break even. If it breaks out, that's great. If it doesn't break out, what are you going to do? Well, you're stuck, okay? They didn't go further above this shallow target. What can I do? I know they're going to come down to the 50% of this bar 13. Where can I buy and fix? I'm stuck up here. How do I buy and fix? You also have to think about that. Where do you buy? So, who's going to answer? Where do you buy? If I'm stuck up here and this is suddenly coming down, giving me nothing, where is the first place you're going to put a buy order and you're going to try to break even in the range of bar 13 if you're using these levels? 50% is, and then the trap zone down here. Yes, Frank. So market is coming down. You're stuck here, right? You bought here. You're stuck here. Here's the 50%. So this blue line is where you want to break even. You didn't break even. Oh, no. Maybe you did. I don't know. No, you didn't. You came close, but didn't. It kept going. But you already entered for one. Now where are you going to enter? You're going to enter somewhere down here. From this line, 11% to minus 11. So we're going to put a bunch of orders there. In the meantime, you're going to measure your break even or average exit. So say you entered somewhere, the first level right there. You put an order there, you put an order there, you put an order there. You put an order 11, you put an order 0, and you put an order minus 11 because it's a fresh zone. It's only tested once. Now we're coming to test it twice. Market will give you an exit. Look, now if you measure from there and as early as right there, you finally exit. You bought there, you even have a better average before it comes down to its bear target. I use these levels all the time. It sounds confusing, but you keep throwing those levels on the chart when you find those bars qualifying. You can fix it if you utilize those trap zones. So we're stuck in this trading range. This is a never-ending trading range. What time is it now? Okay, so is sometime around 2 to 2:30, you might get some kind of a swing, some kind of a breakout. Let's see. I'm going to measure my trading range again. We just tested the lower level. Terrible buy signal bar. But if anybody bought above it because they see a wedge, 53, 56, and 62, okay, and it's right there. I mean, it's a doji, but they bought it anyway. So some scalping here. Where are they going? If bulls actually close a bull bar here, they're probably going to go up here to the midpoint of upper third. And they can even swing this time because this is now a double bottom, wedge bottom, some kind of a higher low, possibly a bull flag. So the bulls need to break this trend line. Okay, so this is a trend line. They need to close above a bull bar to give us a breakout signal. All day long is, so what Stefano said earlier was, yeah, you can buy the low and sell the high, sell the high and buy the low. You could do that too, but up until here, you don't know. And then they kept doing the same thing. Sure, if you don't want to trade certain bars and scalp, that's your option. Swing from down here, swing from up here. The boundary lines, I call these thick lines that separate the lower level to mid-level and the upper third range, are always scalp. If you bought here, you're going to scalp here and you're going to scalp here. It's not guaranteed that we're going to break into this zone. That's why you're getting this bar. So machines know that. So we're pausing there. Plus it's 3 bear bars, probably sellers there anyway. If we close a bull bar, then if you already scalped and you're flat, you see a bull bar, you can buy, you're going to scalp here and you're going to expect market to go up there. So the reason why 64 is stalling here because it's, well, you know what's going on. It is profit taking, the boundary line. But my favorite trading method trumps all of these I said is I'm going to hold this okay, so they're still holding, they scalp. If they close this, many bulls will buy and they will start taking profit here. Others will take more profit there, and then they're going to see if they can actually break out. My favorite way of trading is that point counting. If I take this first bar of the, actually second bar of the day is pivoted, right? But you can't really measure from here. You should be measuring from here. Unless if the bulls made, no, that's 4, that's 5. See, the bears are still selling this. So you should be measuring to see where it's going. Shouldn't be worrying about that. I'm looking for a 10 point. Look, is bar 1 actually reached 10 point and then closed higher? Immediate profit taking, right? So from here to here is a 4 to 5 point scalp. Nothing more. They couldn't close a bull bar above 6 point. So this is a scalp. So it's going to come down more. So what am I looking for now? I'm looking for bear bars. I'm looking for more. I'm looking for 11 point to be breached with a bear bar. I don't see it. We came back to the 10 point and then we bounce again. How much are they bouncing? Should be 4 or 5 points. 5. So it's more than 5. It goes to 6, but still cannot close. I still don't have a bull trend. This is still a bear trend. Oh, bear bars closing. Well, I know this time they're going to break that 11. They come down and test the 10 point zone's lower level, 11 point. I need bars to breaching. I need bear bars. I don't see bear bar. I don't know what the 15 was, but it sure hit something. Look, almost 15 point. But this doesn't count. You don't know. You have no confirmation. You need a bar closing below the 11 point to say that the market is going to sell into 15 and 20 point lower swing levels. You never gotten, you never gotten that confirmation. So this, if you miss this, you missed out 5 point, 4 point, who cares? Doesn't matter. So it's not even 4 point. It's actually 11, 14, 1450. 1450. I mean, it's just 3.5 points, so it doesn't count. We're not going to the 20 point. Market buys again. They're buying. So what are you going to do? You're just gonna count. So you have probably minimum 4 point to 5 point scalp there. Ooh, I got it. Ooh, I got a 6 point close. Bar 16 close above it. Oh my gosh, I'm buying this. This is going to go to a 10 point, if not 9. So the zones where you take profit, it's a 2 point. Okay, so it's a 9 point, 10. I always call the middle, and then you got 11. Okay, so sometimes in an environment like this, it could just tag the 9 and you're done. So there are people actually take profit at 875 after learning this. In a tight trading range environment, if the trading range is only 10 point, they don't even wait for 9 point to hit. They want to get filled before machines start to create this frenzy, okay? You want to get paid before those machines get paid. So look, it's 875. Every retail trader knows about this. They get filled there before this happens, right? So you're like, I got this, yes. Now what? Okay, you got a big bar closing. Okay, what's going on? Well, I'll tell you what's going on. Since the bulls moved the market minimum 9 point and to profit, they have completely ruined this bear trend. You no longer can keep counting for 15 and 20. You cannot do this. This is gone. So you now are going to use this as your pivot, and you're going to look for 5 point scalp and see if any bear bar closing beyond 5. And that's a 5. It didn't close. In order for me to get the 10, I need confirmation. Look, it goes 5 point and everybody's scalping. Machines are scalped, but no bull bars closing. I think it's going to go to 6. Oh, there it is. That's a 6 point right there. Let me put it this way. 6 point. Oh, look, they're breaching. No bull bars. There's one, but it's a horrible bar. No one's going to buy that. So maybe I can sell. Is there might be a 10-point zone here. Look. Is it 10? No, it didn't go all the way 10. But since this is a 10-point tight trading range, what am I interested? I'm interested in 875. Look, this bar gave you 875 before reversing back, and the second time even it gave, second chance to scalp this before it went up. So it's 875. You got nothing there, but you can take profit there. And it's a great way to know how far the market will go or not go. So when you combine point counting with Brooks price action reading, I think you can 100% be sure that's all you're getting is this, and you're not going to go any further. So now a big bull bar is bulls are making money. Probably they're looking for a 5-point. They're 5, 525, they got a 5. Even the second time is they got a 5. But nothing closing beyond 5, meaning 6 point. So can you buy? No, you can't. What do you need? I need a bar to close above 6 so I can go 9 or 10. What am I interested? 875, not 9. Look, that's 9, but you're going to exit right at the 1 tick below because you are not going to get stuck there. If you're in a tight trading range, you got to get what you can. So you got to kill your hunt. I'm not a hunter. See, I would not survive in any medieval conditions. Don't send me out. I'm a gatherer. Okay, it's in the 1 mile vicinity. You send me out to hunt, I will not be able to hunt. But you know what does L say? L say you eat what you kill, right? In an environment like this, trying to get a 10-point is very difficult. Market already proved that to you. So get that 875 and get out of the way. So, all right. So now what? Okay. I know I have a 4-point at the minimum or 5-point at the max. A scalp there. Ooh, 525. Ooh, that's nice. Well, where's the 6-point for bears to get to the 10-point and a 15-point and a 20-point breakout? I don't see anything. Where is it? It's not there. This is not a trend. This is just a pullback and is scalping by bears. That's it. It's a scalp. So now what? Well, now what? What should I be? I'm going to ask the question to you guys. What should I be measuring if bears are not getting a 6-point close here? What should I be measuring? Or where should I measure from? Which bar pivot I should be using? The first person answers the question will get the bar by bar book from Brooks price action team. First person answers the question where I should be measuring and for who will get a book from us. First person. If bears, okay, let me give you a clue, if bears are not able to make a 6-point with this move from here, who is in charge of the market? Where should I be measuring? Bulls are in charge. You got that. But I need the bar number and how I should be measuring. Or at least just give me a bar number. So far, nothing. PCP? All right, bar 25. Exactly. PCP wins. Do you have the book? Or if you have the book, we could give you other books. One of the other, not all of 3. But. So just email me. Direct message me. Okay, so here we go. Yay, great. Okay, why? Because this trend is intact. This is just a pullback. So what does this really mean? If this trend is intact, you continue. Get rid of this. You continue with this. So what are you looking for? 10. It goes 1 tick above 10. Everybody takes profit. This is all profit taking. So thank you. Now you understand? If the opposite sides after reaching in fact, this didn't even reach. Look, that was a 9-point. It did reach. Okay, so did the bears make a 6-point close? No. then this bull trend is intact. So you just have to keep moving until you find a 10 point. As they buy here is, okay, you can even enter for the second time. Or if you're in the long, you're disappointed, you buy again, you expect that 10 point to be hit. Okay. Now what is profit taking? How much is the scalp, or how much is it becoming a swing? I measure here, here. That's not even 6. Who's in charge of the market? Who's in charge of the market? Bulls, yes. What should I be doing? I should be looking for market to get back to the 10 point. But I want to see more bulls. If I want to see more bulls, what do I expect from bulls? I expect them to close above 11 point, like a couple of ticks above. Do you see a bar, bull bar closing? No. Do you expect market to go higher? No. So what are you going to be measuring for? You're going to be measuring for bears and see how much they can scalp. Look, that's minimum 4. It's nothing. They sold more, so that's more. They got a 5 point, more than 5, but nothing closing below 6. That's a 5 point solid with 2 legs down. But if you're smart, you can just take that 4 point and be happy about it. And then you see a 6 point close and follow through. You sell into 10, 15, 20. So now they continue to sell 575. I still don't have 6. Where the hell is 6? I still don't have it. Who's in charge of the market here? Who is in charge of the market here? Excuse me, I am congested. I think I'm getting a cold. I can barely breathe. So who's in charge of the market? Bulls again, yes. Now what do? Now you're going to find 11. Or just mark the 10 and see if we're going to get bull bars closing above 10. Right? So this area, I think the bulls are going to break. Now if they close above 11, what are you going to do? Is you can add more to the long. You can just hold it until average 14, max 15 is minimum 13, or hold it even more for 20 points. Minimum 19, average 20, maximum 21 before they take profit. But first things first, they have to break above 11 to get a follow through. PCP, Richard. Well, Richard's going to send your book. So which book do you want, PCP? Bar by bar. Okay. I know I can get this right. Richard is going to have a heart attack because he's sleeping right now. And when he wakes up, what is this now? What business are we in? Freebie business. There it is. It's official. I don't think he can stay now. So anywho, all right, back to 10-point zone, or I can sign it. Where are you located, PCP? Are you in the U.S. or in Timbuktu, perhaps? I don't know if Amazon delivers it to Timbuktu. I mean, you can just text. I mean, you could. Oh, okay. So that's good. Maybe I could do that. Okay, I might be able to do it. Okay. Why did Mark? Oh, my data connection died. Sorry about that, guys. There's a big red dot. Hold on. Let me reestablish the connection. But I mean, the bars already went up to the 11 point. You saw it, right? So they're trying to break that and get a breakout into the 14, 15 point zone above. So just follow the breadcrumbs. I can see it from trading view. It's data connection. It's real time. It's a one big upside down green doji at the moment. Oh, no, it's trying to break above the 11 point. At the moment. Oh, no, it's trying to break above the 11 point. I'm gonna take a quick break. I've been sitting here since noon. I'll be right back, everyone. Okay, I just want to eat something very quickly so I didn't have lunch, and be right back. Okay, so it looks like those bulls are not able to break the 11 point, which is really the upper level of 10 point zone. That's a swing. So they're still taking profit here, but this was a good bull flag breakouts. And why are they taking profit there? Because when you have a bull flag, okay, so basically you always take a profit at the highs, okay, and then, but breaking out like that is a good sign. If the pullback it's shallow and it's not selling, and suddenly we close above it, then you can look for those breakout targets, or whatever you have, 1-to-1, 2-to-1, if you're measuring 1-to-1, 2-to-1. So I think the market could go higher. So if they can finally break next average 14, could go to 15. I don't know. We'll see. Or you should be still in this long and not give up just yet. Market is gonna try to go test the 19, 50-19 and I believe Tim Stout already called that 50-19 before he left. He even put it on the chart. I don't know if you guys remember it, but I do. He pointed out this area and he even said 50-19 we're probably going to test. So a testament to him that we might be actually going to just do that. So hopefully this bar is going to close bullish. We get a nice breakout, bull breakout, taking out the 67 high, and that's what you want to see. That would also confirm the breakout from the 10-point zone. Bar 69 tried, but it's nothing. I don't like this, but it is not a good reason to sell here. So if the limit sells were above 68, okay, they would have closed bar 69 bearish. Therefore, you shouldn't sell anything here. If bar 69 were to close bear bar, okay, is towards the low of 68, then I would have said to you, this is done. You look for a swing trade down. 5 points minimum, 10 points and more. But that never set up, so they're going to try to go one more time above the 67. I bet they do. I think on the cash, we already tagged it, didn't we? I think that's what. I don't look at the cash market. I think Tim Stout was talking about that earlier. I think he said that we did, and maybe even mark the chart. Oh, if they have missed it, then they're definitely won it this time. Can we get a big breakout? Oh yeah, this could be rounded bottom with a handle and a breakout. We could take this trading range and actually project it up. That's 50%. That's 1-to-1. But I don't really measure like that when I'm getting those targets. I exclude the wicks. So this is my target. Also high of yesterday and this is my target. So 14, 15 is almost there. Here is 15 oh, look at that. Such a big confluence. The 50% breakout of this range, high of yesterday, and the 15-point swing. Okay, I guess that's where they're going. And I bet it's 2-to-1. If that comes out 2-to-1, oh well, it's not. Okay. Oh, maybe we can go to 2 to 1. Who knows? Or that, no. Just take the whole breakout bar. But technically, we still don't have that bull close above 67. We need that bull close. We have an inside bar is at the highs. Now, if this bar 70 closes as an inside bar, it's kind of a dangerous situation at the highs because bears already trying to want to sell is below these inside bars at the high of a trading range. So there's 34 seconds for bulls to get this breakout, but they have to get it right. That means that body needs to close above 67 high or somewhere near. We get that, we can quickly go up, okay? Bears trying to prevent that because they know if that happens, minimum, we're going to go test here. That is also a triangle, so bulls are trying to get a breakout from the triangle. Could be maybe now, maybe now. We have another inside bar. You have is outside, inside, outside, inside, OI, OI. So it's a breakout mode. There's room to upside to 50.19. Wow, that's a breakout. I'll say. It didn't close bar 70s. Bar 71 is already testing, but we need a bull body. There's still room to upside. If market accelerates, I don't know, we could actually make it up to here. This has been my target since pre-market. 50.25.75 is, I think that has been my target for entire week, since last week, in fact. So we can accelerate and we can get the 50.25.75. I'm going to average this 14. So here's a problem. That bar didn't really close above 67. Really nice bar, but it failed. You see that? 71 close is not, but it could still go. I mean, this is a leg 1, maybe pull back. Leg 2 is, or leg 1, pull back. Leg 2, pull back. We're in leg 3. And the bulls are having a hard time closing a bull bar above 67 high. Could it be the end of it? I don't think so, but the way that this bar opened and now it's accelerating, but it's trying to test the spike pullback channel, bar 68 lows. There could be some buyers there, so watch out. But I don't like the way this bar is. It's trying to test these bar 68. So trading range day is late bull breakout, although this is above the EMA. We are below the EMA. And the breakout is not all that wonderful, but we just tested the 68, and not being able to test the 68 body kind of tells you that bulls still want to push this higher. Okay, so here's one. We start to make higher lows, higher lows. This one's a lot better, but the breakout actually came in midday. Ours is late. That's it. So here we go. Something similar. Now the question is are we going to take out yesterday's highs? If that's the case, remember what I said about the daily bar. Daily bars want to get to the measured move target, which is, although I didn't do a good job there. So that's it. 48.75. The daily bar is trying to become a follow-through bar, but notice that we might be also developing a island top on the daily. So island tops are reversals, and we could reverse. So let's see if we can actually go a little bit higher. Down, down, up, down, higher low, MTR, higher low, MTR, bull flag, smaller. Ours is bigger, but look at the breakout. So is spike pullback channel, spike pullback, we're in the bull channel. So we're definitely going here. We might even go up here. Okay, I hope it doesn't fail. Let's see. That's not good. Well, it is a breakout, but it's a bull breakout, except that it just ran out of time. That's not it. Okay. If let's see, the hourly bar is a doji at the moment. The last hour was bullish. Bulls might actually get a follow through here. We might need to test the last hour's high before coming down. So we might need to thoroughly test before we even sell back to the EMA. So days like this where's my, oh, I deleted it. You might actually come down and test the open of the day, but trying to, oh, sorry, I was selecting something else there. Open of the day. It's right there. Inside, outside, currently inside. If the bar closes higher, bar 73, we could still get a breakout to the upside. It needs a third push for spike, pullback 1 and 3 before coming down. So maybe 1, maybe 2. We might need that third one. So if this bar closes on its side, we get a quick breakout. But if it closes on its low, you know that it can actually come down even further towards the body of 68. So you know why this is happening. It's the 72. You already know. I already told you. Bulls are having a hard time closing above 67. There's no bull body. So there's no confirmation there. Bulls are still pushing, but I don't know at this point. I mean, we would probably make another high here, but we might need to wait for bar 75, okay? What if we just collapse and come back down to the open of the day or the EMA. I think there is a target up here, and bar 75 maybe need to get up there before coming down. So that's end of day imbalance could create that. So it looks like they're trying to close the bar bullish. Is okay, 18 seconds. Let's hope that bar actually closes bullish. But if they can't, then I am worried. Check something. Nope, that won't count. It didn't close bearish. It also didn't close bullish. So now bulls got final chance to break out and get a follow through, and they might actually get that breakout this time. This is the problem, resistance, and market wants to bring price all the way back down to the lower third of this last hour's range. But we have a target out there, and the bulls kind of earned this. It's just that it's a good breakout, maybe here, this structure, but not here. So it's a terrible follow through. And so if I were in this trade, well, I would have definitely taken profit there, but I would need to see a bull bar to continue or even buy. There's small head and shoulders pattern here, or left shoulder head is right shoulder. There's some kind of a neckline here underneath 72. Market needs to break that and take this range and project it to downside. Be careful, we could come down and suddenly buy again. We're coming to the bar 75. Could do a lot of damage if you're trying to trade. This should have been your signal to maybe exit out of the market, or if you haven't, maybe exit out. You could have bought underneath 71, break even, back again to where you were, so you wouldn't lose any money, because market gave you 2 chances to do that, although it's maybe not this one, because it opened here, went up, came down, went up. So it processed your order underneath 71, but it gave you a break even with 73. And 73 not closing above 50.17, so that's a problem, right? Many bulls will exit, and then they're going to wait for bar 75. So it's very important that when market cannot close above, it went there 12, it kind of did close. Maybe I'm measuring this wrong. So here is 11. It needs to close like 11.75. So it did close, but no follow through. So, but to me, this is a breakout. So I think the bulls are going to try to buy this. So I was wrong measuring. This is a breakout. So this could be a pullback and buy again. So this is basically a triangle, some kind. Bulls got a breakout, but no follow through. So this is where I would stop. This is so confusing right now. I'm confused myself. I cannot read this price. If bulls are coming in, I've got 2 bars here. Maybe there are buyers underneath 70, and we need to test that, trap everybody, and then go. But I see this. I'm out. I would not touch this, because this is a trading range day. Market may want to come down and close near open of the day. And, that's giving back a lot of points. So you got the bar 74, 70, until 75, you got a bunch of bars going sideways. Breakout could fake you out as well. But some bulls will buy because in order to get a breakout, they need to close at or above three ticks above 11 point. That's why I said above 11 point. So they already got that confirmation. So they might be buying. They're disappointed. They were up. So now they're buying. Look where they just bought. I'm going to get this out of the way a little bit. The open is the open of 2 bull bars, 3 bull bars. Second bull bar is open. So first they bought is underneath 71. They had a break even. Then they bought the open of 70. They're trying to get a break even and breakout. So that means we need to close the bar above 50.17. We get the close above 50.17, bulls are going to get a breakout, and we're going to end up going up there. So I'm going to mark again. I'm going to mark the 14 average, but the breakout could get us to 15, maybe even 20 points somewhere up here. So I want to see break above 50.17. That's the second break even for bulls. That's good for them, but not enough. We need that breakout body close above 17. This is where it gets very dangerous, and don't take it lightly when Brad Wolf tells you, don't trade this. There's always tomorrow. Because it's a back and forth. This is where machines come in with big orders, and suddenly you have fast moving, okay, cars. You're stuck in a highway trying to cross the highway. You're going to be a roadkill. I've lost accounts like that, and actually I've lost my, not account, that's dramatic. I lost P&Ls. So it's beautiful P&L. I've done perfect. For some reason, there's that little devil in me. Oh yeah, you can trade that. So I go in there. I'm buying, I'm losing, exits. I'm selling, I'm losing. Oh shoot, exits. So now, say I have $1,000 P&L, that it was around here. Now ended up becoming $300. So now I'm all stubborn and angry all at the same time, and I want to make it back. And I start to sell this. And on bar 76 closes, 77 opens, and it just breaks out to the upside. I'm down here, stuck. I lose the whole P&L, and I end the day close it red. That's no fun. Just don't do it. That's why you want to stop. And every one of us eventually experienced that. And that's basically YOLO. I call this a YOLO hour. You only live once. You enter with trades, and you don't mind losing it. And you're basically on a sim trade. So that's YOLO right there. Oh yeah, you can. I use it on 1 hour all the time, any time frame. I use it on daily all the time. It just moves differently. On the daily, because you're stuck on 1 bar, so you're not really looking for closed confirmations. You're looking for bar to go test, break out, get to the next level. I actually used it. It's on the daily many times. You can use it on the hourly. Yeah, you can. So, like, there's one right here you can use. Like this one. Sorry. This bar right here. Okay, so I'm going to measure it. Here's the second part of this trading, right? So we trap. Buyers were right there. Beautiful. They bought it, hourly bar. Closed, even breakouts, but it's the first breakouts, and the bears didn't get a chance to sell. Look what we're testing. The upper level of trap zone. There are sellers waiting. The reason why you got this bar closed like that, bearish that hour, because there were no sellers, and they probably observed those buy or sell orders, but eventually they started to sell, and we had a bear close. Okay, but market is still bullish. So what do you do here? They actually reached that targets and came down. So now they reached again. Anyone stuck? They got again. But they're not able to close bull bars above to get to this target. So this area is holding. if we start the sell, where are we going to go? What do you need to sell? Obviously, you're stuck here. Is you need a bear bar closing below 79%, right? So you got this. Came in here, tested. There's some buyers here. They bought it, right? Market opened here, maybe. Immediately they bought it. Market opened there, went up, but came down, right? So if you sell, where are you going to take profit? There. If you sold, if you put a sell order underneath, because this bar, maybe this bar closed below this right here. So it's telling you, I'm going to go and test the midpoint of this outside-inside combo. And then if you're still holding or you just sold one tick under, you need to take profit. Either scalp 33% or this level. If I cannot close a bear bar underneath this, most likely buyers are waiting and we could go right back up again. Because it's a bullish. Price action says this is actually pretty bullish. So it just came down, right? Another way is of the trades, the inside bar. So mark this. So when you get the outside bars, mark the inside bar. If you get a bar is closing, is taking out the high of inside bar, you measure this bar and you expect 1-to-1 target. I don't know if we're going to go there. I don't generally use this on the 1 hour, but I use it on the 1 minute. And I used it today actually a lot. So here's a 1-to-1. We pulled back but we never closed anything below the inside bars. It's taken a lot of time. But if we suddenly get a breakout, what bar is this? 75, 76. The close of this bar, suddenly bulls show up, that's where they're going to want to go. 23, 25. And let me show you something. Some inside bars here. So let me get rid of this. You don't need this, and you kind of don't need that. So let me find some bars here. From the open. This was the first one, right? So it's inside, outside, inside. This right here is, I don't know if we're going to get that, but this is the inside bar. I'm looking for a bull close above it or bear close above it. We got one. So I got my targets. That's my target. I can scalp that. We got more. That's 1.5, but nothing further. So once the bull bars start closing above the 1 hour, you have to exit, right? So you got an outside, inside. You do the same. That's your 1-to-1. They kind of failed, but that's because I don't know. I don't know why they failed. That was kind of upsetting. But I told everyone, if you're buying this and that the bears are looking for double tops, and if we do not get that 1-to-1, many bulls are going to be stuck here, and they're going to be forced to buy down here. So if you find another combo like 7 and 8 inside bar, and you sell, you can. Why would you sell? Bar 9 closed below the inside bar. That's your scalp right there. If you are failed and stuck, you can do two things. Is you can wait, hold, buy again here. You were stuck here. Is you buy again here. Bar 13 or 14 will give you the break even. Heck, you even got a better break even right there. 80% is, even though it went down, you could even buy here. Doesn't matter. That's 2-to-1. But eventually it gets back up. When a 1-to-1 doesn't meet and it kind of snubs you, you can use these levels as bears are taking profit, enter. And eventually you're going to make money. So I'm going to find something else. Like here's one. There is a 14. There's outside, inside. Would you sell below the 14? No. There's no bear close. So what do? Would you buy above the 14? there's a bull close. No, because it's a bear bar already broke out to the downside. Probably this is going to be a shallow, and you're not going to get it. So look, it ended up becoming, if I actually measure, it's only half. Look, it's only half, almost half. Couldn't even reach. It's a one tick failure. Oh no, it did reach, sorry. No, it's a one tick failure. Why? Is because it already broke out significant enough. So you have to worry about these things, right? But if the 15 low was higher than the 14 low, this would have been already reached here, probably even get the second target. So I'm looking for something else now. There's one here. You got it close, but I'm not so sure. We didn't get it. We only got the half, so you can see this isn't bearish enough. And here they got a 1. I don't know if I would actually buy this. But with this bar, I probably would enter and go for it. Something else is, here's this one, 37. You either want the next bar or the bar after. You don't want set 3 bars after a breakout. You want the breakouts to be close. So what do we got? Bulls are trying to trap the bears underneath the EMA to get a breakout. If this bar closes bullish, okay, on what bar is that? 77. We're gonna go up. We might even go higher. But anyway, so what else? So they got the 1, 2, even 3 to 1. There's one right here, but big bear bar, big bull bar is, I don't know if I want to sell this. It's nice. If you do sell, how do you sell? You're not going to sell the close. You're not going to sell underneath. You're selling either the close or 1 tick below. If you do that, that's great. You won't enter. So you're safe. So this one, if you sell under, you got this much profit. If you sell under, there's nothing to sell. Sometimes this is my laziest way of finding trades. So lazy. Here's one right here. If I put a sell order underneath this bar, I don't know. I could get trapped. I don't like that. But this bar closed. If I sell underneath 53, there's not much of a room there. But I didn't really get filled, did I? So what do? If you sell, you're not going to wait for this. You can trail the sell stop order. There's another way to enter. And then you enter is, if you keep trailing, is trailing, and then the bulls actually close above the inside bar, you got to cancel that because it could go the other way. But it gave you an entry from underneath 55 to here and then back to here. So you got a lot there. You made a lot with a stop up here. Well, when I say a lot, it's not a lot, but that's 2 points. At that point, the market wasn't moving all that much midday. So I'm lazy. I want another trade. I've got a trade here, but nothing close below the inside bar, so I should measure from here, and that's it. So how do you buy? That's right there. Your enter, there's not much of a room. Or you can buy above this bar because it's close. I don't do it. That's not my rule. This doesn't meet my rule. So there's not much room. I probably wouldn't enter this because I know they're going to take profit and it could come down. I can always sell it, right? That's a big profit taken bar. So now they are taking out this. So if you put a sell stop order underneath this bar which took out the 60, that's your target. That's what you're going for. Or here's your inside bar. Measure that. That's better. I didn't see that one. So I would have measured this one. I've got a breakout. That's perfect setup right there. It's perfect. 1 to 1. My stop is above. 2 to 1, 3 to 1, 4 to 1. Holy cow, I missed this trade. Oh man, I totally missed that. That was a perfect trade with an inside bar. So anyway, my data is behind, really? It doesn't look like it. I'm looking at the Thinkorswim and Trading View. That was perfect. I just missed it, but, and again, I mean, it's all these techniques, you just pick one or two and apply. But boy, when I'm busy, when I'm really, really tired and I don't want to do anything, oh yeah, that's great. 2 bars after we had a breakout. Okay, I'll sell it. Earliest way to enter is putting a sell stop underneath the bar that with a wick passed. So you don't need to wait this much and lose this much. In fact, how can you sell this? This actually is taking profit. So if you actually put it, you're hoping that it's going to go to the 2 to 1. The earliest way to enter is when the wick actually breaches, but there's a problem of there could be buyers there, right? But you're not entering here. You're entering here. So this would work, and you would get the targets. So let's do another example for that. Starting with this, right? So is bear bar. This one is where I want to enter. Nothing. I'm going to trail underneath this. I enter it. That's my target. I'm taking profit there no matter what. Done. So it won't go and hit my stop. Let's find another one. There's this one. This one did break. So I'm entering is below this. I got filled. It's identical lows anyway. And I got this much. Yeah, it's not exciting, but profit is a profit, right? Profit is a profit. 1 point, solid 1 point there. I made it. But let's see. What else? There's one right here. This one not only broke below with a body and this. So I have a sell stop there, but I do not get filled. Okay, so what do I do? Well, when this bar closes 33, I'm going to put it underneath. But unfortunately, 33 actually closed above it. There's no point of trying to sell anything. If you're stubborn, you can do a backdoor. You can find some kind of a backdoor and still sell. But in this point, you can also measure. This one already broke. You can also go long and take profit there. Where do you enter? Above the bar, 1 tick above, that actually took out that high. And then you can get a backdoor. This is fun, but you just have to stop looking at everything. You're literally going by the inside bar. That's all. And you go for 1 hour. If you catch a good swing, you're gonna get a lot more than 4R. One time it was like an 8R or 13R or something. I didn't even have those, on the chart. I just kept measuring and put, oh my gosh, where is this going? This is great. But that is very rare. So I think there's an end of day review. You guys don't want me to review anything. I think we have that review with Brad Wolf, so you guys want to join him. He's going to say this. Today was crap. It was nothing but a trading range trading. But late end of day breakout failed. Bulls are trying to reach. There's not much of a time here. But they can still get to the target. I just want to measure something. Nope. Bulls still own this market. Therefore, they're still going. I think we measured here. Oh, yeah, they got it. Oh, my gosh. Okay. That took a long time and a detour. But that right there is 15 point to the tick. 15 point right there. I mean, isn't this funny? I'm crying inside because I missed it. But is you see who owns the markets, even though the bears got it, didn't get it, is yes, it's a more than 6 points, but they never reached the 9 point. So the bulls still own it, and they're saying, no, we're not going to let you hit the 9 point, and we're going to trap you. Traps generally happen underneath the EMA, so you can mirror that. But if you actually sold that, bears actually made money, sorry, right there. And to profits, you can also measure the outside bars too, but it'll trick you. It's going to go beyond that. Inside bar is what you need to measure. So they got 1, 2, 3, and 4 R. So and then bulls took over right there. So what if you actually put a buy order right there? You would make money all the way from here. Here's an inside bar. It's nothing, right? But here's an inside bar, and the bar is actually breaches above. You put a buy stop order. Did I talk about that? I might have talked about that. But if you put a buy stop order, nothing. You lower it down when this bar closes. You get filled with this bar. And let's see how much you get. I bet it's a 1 point. Solid 1 point. So market will give you a 1 point reward regardless it's a bad trade, meaning there's not much of a room. But it's rewarding you for doing the right thing. So I think I proved that in several times already. But anyway, how funny is this? We just reached that. Okay, I'm not going to do anything here, but I already show you how I entered on many trades and how I fixed it. So now let's go join Brad Wolf on YouTube. Okay, everyone? You all have a great day. I'll see you guys tomorrow. Bye.